So good morning, everyone. Welcome back to day 3. Welcome to our old friend, former chair, Andreas Bergman, who's joined the public gallery and is going to be here for the next couple of days. Hopefully to see the approval tomorrow of property, plant and equipment, which is some projects that were kicked off under Andreas's term as chair. So it'd be very appropriate if we can approve that tomorrow. Also, just to say a huge thank you to staff and also to the members of the measurement drafting group for all the hard work that's been going on the board's behalf in the background. Obviously, we had the drafting group meeting on Tuesday evening. What's the track of the days this week? Tuesday evening after the first day of the board meeting. And staff have then put through drafting changes to update chapter 7 of measurement, the conceptual framework on measurement, and also property, plant and equipment. And members of the drafting group have been turning that round overnight on your behalf, and thank you very much for doing that. So staff are working through those final edits as we speak. And that will come back to you later on today. So Ross, do you want to just walk us through what members will see?
Yeah, thanks, Ian. And first, the press release we discussed yesterday in the closed session has been distributed to members this morning. And I know from the email bounce backs, a lot of you have your out of office on. So just a reminder to members to please go in your inbox. The release is there for your fatal flaw review. And we're asking for comments back by the end of lunch, if any, just so that we can get this out. The comms team's teed up and we think it's timely and we want to get this message out while it's fresh. So, we'll be around over lunch if anyone wants to talk anything through, but that's now in your inbox and we're looking for your feedback. Yeah, if anyone doesn't have it, come and see me on the break and I'll make sure you get a copy of it. So on approvals tomorrow, we've got a package that we're working to finalize right now, and we'll distribute the documents that we're going to vote on tomorrow before the collaborative session today. So we're just working on some final touches, but in that package, you'll get the ED on leases with the updates that were agreed yesterday and the staff have been working to process. You'll get PP&E with the changes reviewed and agreed by the by the measurement task force. You'll get the measurement conceptual framework chapter with the various changes that have been agreed. And you'll get specifically on measurement, the changes related to deemed cost, just so the board can see, have a fresh look at that, because that was an important part of the package. Tomorrow, when we go through the items, we will be looking for fatal flaw points. So points of substantive issue on any of those documents before we vote. We don't plan to have an editorial session in the board. We have editorial groups. We'll have ample time to work through those edits after to get the clarity and make sure there's consistency. But the view is we want to focus on the principal discussions given the time we have available and rely on the editorial process to get that level of consistency. And just one point to make from a staff perspective is normally when we do the edits in board meeting, we usually create more problems than we solve. And we find those when we start going through the documents after the meeting. So I know sometimes we like to do that in meeting, but it's really not that helpful. What we really need to hear is the points of principle that would cause members to vote against if they want to discuss. So just making that point of emphasis because we will have limited time tomorrow. We do need to get these documents completed and out. Thank you.
Thanks, Ross. Yeah, so it is literally a point of principle, which is actually fundamentally wrong, and it's not something that the board has already made a decision on, and you disagree with that. We're not going to redebate things. It's literally, there is a major problem here. So with that, couple of sort of just administrative announcements in terms of today's session. We will have the presentations to departing members before we finish the afternoon session today. That's obviously because Ajith is one of those, so we need to do that whilst we've got everybody online. So those presentations will be then. There will be a photographer around this afternoon, just generally taking photos of the board meeting and then specifically of the presentations. And then we've got the social this evening, which is totally informal. It's a sort of come and leave when you feel like it, between 5:30 and 8:30. So it's very, very informal, relaxed, celebrate the achievements of the year, and hope that everyone can make that. Leah, is there anything I've forgotten at all? No. Okay, we'll remind you of the details and so on. Ross.
I was just going to say this, for those who didn't see Leah's email, it's at the Elephant and Castle, which is at 212 King Street West, corner of King Street and Simcoe. Less than a 10-minute walk from the hotel. If anyone has any questions, grab a member of staff and we'll help you out and explain where to go. Thanks. And it's from 5:30 to 8:30.
Great. Okay. So with that, we move into the session on transfer expenses and revenue, and welcome Eileen and Edwin back. We've got plenty to talk about, but again, this is all directed at making sure we're in a good place for finalisation in the March meeting, and that basically we've, if you like, we've rinsed through everything as much as possible before we actually get to the meeting. So Eileen, over to you, I think, first.
Thank you, Chair, and good morning, everyone. So as Ian mentioned, we thought it would be good to start with a general summary of the progress on both of these projects, what we've accomplished together with the drafting group over the last quarter, and what we anticipate in terms of the next few weeks leading to the March timeline when we are going to be putting these two projects up for approval. Now, in terms of the first paper within the agenda item, this is very much an informational paper to try to provide a summary of what we have done so far. And the board has overall made substantial progress on both of these projects. And this is thanks to a overall very consistent approach and active engagement from members as well as drafting group offline between meetings to really help us make sure that we are actioning and incorporating the decisions and the instructions that the board has made since they began reviewing the ED comments, which came back in late 2020. Now, at the board meeting in September, when we were in Lisbon, we had reviewed all the authoritative text for revenue itself, and we also agreed on topics for implementation guidance. And so based on those decisions on the revenue side, we spent the last quarter really working on getting through some minor changes on the authoritative text based on comments that we received from members offline, and really getting into the drafting for not just the IGs based on the topics that the board agreed on in September, but also really starting to put together the basis for conclusions. Now, during Q4, we have been able to draft all the basis for conclusions and all the IGs that we initially agreed upon. And the only thing I would, I guess, flag at this point is that we actually added 2 additional IGs to the list that was originally agreed upon by the board in September. And this was really a result of talking to some of our key constituents about where they felt there was still complexity within the revenue model and where we could benefit from some additional clarity through this non-authoritative guidance. And also from some offline discussions we've had with one board member, specifically about the capital transfer definition and how we can bring some more clarity about what really would meet the definition of a capital transfer. Now, during this quarter,
Yeah, I was just going to say, I mean, in terms of that engagement, just a reminder for board members that the drafting group does include representatives from the European Commission and the United Nations system. So we're getting, because they're big users of our standards, and we're getting that direct input through that way in terms of, is this going to work in practice? Where might the problems be in getting consistency? And, in particular, one of the things that Eileen did was actually go and spend 2 days, I think, with them, actually, really, so that the representatives from across the UN system organizations could actually work through a number of sort of actual use cases, and then interact with Eileen. And I think that's been really fantastic doing that. So just thank you to Jerry and colleagues in the UN system for organising that. But thanks to Eileen as well for being the one in the lion's den, as it were. But I think that's provided a lot of very useful feedback. But I just thought it was useful for members to sort of have that context that we are really picking up actual preparer issues and making sure that they're factored in. Sorry, Annie.
No problem. Thank you, Chair. So in terms of the drafting that has come out of this, just for board members to be aware, the drafting group actually met twice during this quarter to go through all of this drafting and to do this detailed review. And as the board had sort of tasked them with, the drafting group really considered whether there was any of this drafting that they thought would be good to flag for the board to consider in further detail, whether because they thought the decision wasn't clear or they weren't quite sure whether it was had been presented correctly. And I'm happy to announce that the drafting group didn't notice anything like that. They thought overall it was a pretty clear set of drafting. Now, of course, because we are at a pretty important part of this phase of the project, we did want to offer the opportunity for board members today to also do a page flip later and go through that drafting for basis for conclusions and the IGs to make sure that we address any fatal flaws that are noted by board members. And as always, we're happy to take editorial comments offline. We have received a few from members around the room as well. So thank you very much for that. And we understand it's a continuing process. So please do reach out if you have any questions or comments. Now, in terms of moving forward, what we also did during Q4 was to really go through the IE topics and start to propose topics that we will begin drafting in Q1. Now, this is an agenda item we will be presenting later today, so I'm not going to go into too much more detail at this point in time, but really focus on this space between December 2022 and the March 2023 plan approval that we have on the slide here. Now, what staff will be doing, and we've actually already started doing, is drafting IEs. And you'll understand there's a volume of that there, on at least on the revenue side. And we'll also be revising amendments to other IPSAS, which is authoritative, and that will also be proposed in terms of our process for the board later today. Now, overall, we do feel that once we are able to get through that work in Q1, we will have a more complete package of guidance for the board to really consider as a full when you are going through this approval process and to do the vote in March. Now, as a gentle reminder, after the board will be asked to approve the actual pronouncement, we will be immediately moving into a vote regarding re-exposure, and staff will be putting together a paper, one for each of the two projects, about our proposal for whether or not we think that re-exposure is or is not necessary. I'll take a pause here. Ross, you wanted, or Ian, you wanted to say anything about the approval in March before we move on to transfer expense?
Okay, I think the only thing that we've missed there was just that the process that we're going to follow with regards to the implementation examples, because they're non-authoritative, is that the drafting group will be doing the review of those on behalf of the board. This is what we first did with the financial instruments standard, where again we had a huge volume of non-authoritative material that we needed to go through. So that doesn't stop our board members bringing anything up on the illustrative examples by exception, but we're not going to be going through all of those in the board meeting. So just to underline that that's entirely allows you to bring up specific issues, but we're not going to spend board plenary time on walking through those when we get to March. Ross.
Yeah, I just wanted to emphasize that as well for members who weren't around when we did the financial instrument standard, is that process did work really well and allowed focused discussions on potential problem areas. So there were a couple of items referred back by the task force for the board to consider when we were finalizing, and those were debated, and the thinking from the task force we shared with members, and we got to a good place and moved through those. And there were a couple suggested by members where there were questions where the rationale, the drafting group or task force back then went through to not develop an example was explored. And I think we ended up with one example that came from the board, in addition to the 20 or so that were reviewed by the task force and were added, and then some tweaks to the existing example. So just to give members reassurance, this is a process we've used before, and it is the non-authoritative sections. You've agreed everything in the principles for both of these pieces of guidance now. So in all these examples are doing is illustrating the principles that are there. And just on the re-exposure due process point, I mentioned in detail on Tuesday and talked about this in the CAG a little bit. There will be detailed papers for members that walk through re-exposure considerations for the members, supported by a staff analysis on the changes since both of the exposure drafts, and a recommendation on whether, from a staff perspective, a vote on re-exposure is necessary or not. And we're preparing those, and you'll have those in the package of paper in March before we go to voting, so that you're well aware of the staff view and the details on re-exposure. So it's not a snap decision, then, you know, a reaction to the approval, but rather a reaction to the analysis and what due process actually says around re-exposure. Thank you.
Okay, with that, just to open up for any questions or comments on that overall timeline and the process that we're proposing to adopt. Okay, I'm not seeing any flags. So if you can then take us through the situation on transfer expenses.
Thank you, Chair. So a bit of similarity, so I will try not to repeat myself too much here. In terms of the board discussions that happened in September, some of the key takeaways from that Lisbon session was that, one, the board was able to review all the authoritative texts aside from presentation and disclosure. But on that note, the staff had presented some detailed proposals on how we would be actually writing the guidance within that section. And also we agreed on topics for implementation guidance, similar to how we did for revenue. So in Q4, on the transfer expense side, staff began to actually write this guidance for the disclosure section, which was reviewed by the drafting group, drafted the basis for conclusions, as well as drafting the actual IGs themselves. Now, to note here as well, we did add 3 additional IGs to the topics that were listed in September. 2 of them were to, I know we shouldn't use the word mirror, but to be consistent with what we tried to do in revenue as well, on the capital transfer definition, as well as the multi-year arrangements based on the discussions with constituents. And the last one was actually an additional IG on transfer expenses without binding arrangements, to provide some more guidance on essentially accounting for transfer expenses without binding arrangements. Now, similar to revenue, the drafting group did not notice any specific drafting that required substantial board review or detailed discussion, but we are offering that opportunity for the board as well today to do that page flip and see if there are any comments about fatal flaws, etc. And again, happy to always take editorials offline. Now, in terms of moving forward, we also discussed proposed illustrative example topics, which we are going through today. And in Q1, we will be drafting that and working with the drafting group on refining it. Now, as Ian has rightly reminded me and the board members, those will be brought to the board by exception in March if there's anything that the drafting group feels does warrant some additional board review. And with that, I'm happy to pause here and for any questions about the transfer expense project timeline. Thank you.
Thanks, Eileen. Any comments on that? Obviously, what we're trying to do is make sure that we can get through the volume of material in the most efficient way, but making sure that it is all subject to a review by members on the way, either in the drafting group on the board's behalf, or as we're going to do today in terms of basis for conclusions and IGs by the board itself. Okay, good. Thanks very much. So move us into the first item then.
Okay, so thanks, Ian. So I'm going to be going through agenda paper 9.2.2, and this paper covers an analysis where we try to give the board comfort that the staff has reviewed all the issues that were brought up through the comment letters received for ED 70 and 71. So the first point that I'd like to bring up is, as you might have noticed, I'm actually doing this paper, even though I didn't work on the revenue standard after the initial exposure draft. And that's because we wanted to have a certain degree of independence in this review. And essentially, I audited the completeness of our work. So what we did was we went back to the in vivo analysis, and that was the software that we used to essentially break up all the comment letters into individual comments. And I went through every single comment just to tie it back to a paper that Eileen had written, just to make sure that we had covered everything. So from my analysis, we noticed that there were a handful of comments that related to things that were already decided by the board back in the CP stage. So a handful of constituents wanted us to go back to exchange versus non-exchange, which we already decided to move away from. So those comments were dropped. The vast majority of comments related to present obligations and performance obligations, and really the scoping between ED 70 and ED 71. And also a lot of constituents said we should put more focus on transactions that were more prevalent in the public sector. So since the ED stage, we've combined the two exposure drafts and we've reordered the guidance so that we start with transactions without binding arrangements, which are more prevalent. So that reshuffling itself addressed, I would say, maybe 90% of a lot of constituents' comments. So the remaining comments I've put into two buckets, and one of them was really asking for clarifications to illustrative examples or more illustrative examples, and we'll be talking about that in the next paper. The last bucket of comments, which I thought was kind of interesting, was we had people asking specifically, was it appropriate to adopt private sector principles from IFRS 15? Now, we never really addressed this in the exposure draft or the CP stage, but we talk about alignment with IFRS in general within our strategy and work plan. And also specifically for IFRS 15, we thought, well, there were two ways that we already addressed this issue. First is we've obviously modified IFRS 15 to make sure it fits within the public sector context. Even back at the ED 70 stage, we didn't really just change the title. We did a lot of modifications. We changed all the illustrative examples. So everything was made to fit the public sector. And the other thing that gave me comfort that it was appropriate to adopt the private sector principles was when the ISB went through this process and developed IFRS 15, their constituents came back with broad support and said that, yes, IFRS 15 will result in better accounting and disclosures for revenue. And since in the public sector, there are revenue transactions that are of the same nature as in the private sector, those benefits are also expected to transfer over to the private sector. So based on that analysis, we thought, well, we've already covered all the comments on the scoping and the performance obligation issues, and we've covered the two residual issues essentially in this meeting. So I guess my conclusion is that we have completely addressed all the issues that were raised by constituents at the exposure draft stage. So based on that, staff is proposing that we go ahead with the finalization of the revenue standard in March because we've addressed all of constituents' comments.
Thank you, Edwin, and I think thank you to you for, because just to remind members that I think we got over 200 sets of comments, so that was not an insignificant exercise, but I think it does give us a lot of comfort that we really actually have drawn on and considered all the comments that have been made, and I think the NVivo software really actually does give us a degree of assurance as well as the board that really those comments have been considered. We've done something with them. Ross.
Yeah, just an overall comment to make to members. You should feel very confident that you've had a good audit of the issues from Edwin. I can attest to his proficiency as an auditor, and I can mention that before he joined us, he worked for the Canadian regulator, and his job was to go through audit files and make sure they were done properly. So if you can't trust Edwin's audit of these issues, there's no one around this board you can trust.
Thanks, Ross. Thomas.
Yeah, that sounds actually quite frightening to work together with Edwin then. But I want to kind of see that in a more positive light, to be honest, from a CAC perspective and from a public sector interest perspective or public interest perspective. I'm very pleased to see the level of due diligence which has flown into that. I can kind of only confirm that has happened also with the CAC comments. I'm very pleased to see how kind of the CAC comments were kind of implemented, followed up and reported back. Probably the most strategic part of that was to kind of go away from two different standards and to kind of merge the issues into one standard and to follow the, let's say, public sector specific transaction flow as the most prevalent types of transactions. I think that has been probably one of the most important things for us from the beginning. I think the CAG was involved at a couple of times in an appropriate level, last December 2021, June 2022. So I think that was the appropriate level of involvement. And thank you very much for kind of looking at all the comments of the CAG as well.
Thanks, Thomas. And of course, there were, a number of earlier CAG discussions as we went through the development of the consultation paper and the exposure draft. Any remaining concerns from board members? Okay, that's good. Well, thank you very much, staff, for doing that. I think it gives us a lot of confidence as a board, and our stakeholders should take confidence from that as well.
So the next item on our agenda is 9.2.3, and apologies, I think the animations on the slide kind of cut out, so I will try to focus on me and not the slide itself as we try to build this up. So based on staff's analysis initially in September, when we talked about implementation guidance, we had also noted and the board agreed that illustrative example topics should actually be done after implementation guidance. And the reason for that is that by nature, illustrative examples are often misconstrued as authoritative rules, when that is not actually the case. Illustrative examples are, they accompany and are, part of, not part of the IPSAS itself, and they are really non-authoritative in the sense of they're helping to illustrate aspects and to provide a showcase of how principles might be applied using very general case facts, but they're not meant to be interpretive guidance, though sometimes they are interpreted as such. And so we thought to kind of, help ourselves with how we are going to put together the guidance in this revenue and transfer expense IPSAS, we would tackle IEs after we do IGs. And we would essentially be bringing in IEs as needed when the principles are not already considered sufficiently clear based on the core text, the application guidance, and the IGs that have already been written, and to use fact patterns that are more general and therefore more prevalent globally amongst public sector entities as we are international standard setter. Now, what the board and the task force had done even in the original EDs was really put a lot of work into drafting the IEs as part of ED 70, 71, and 72, which went out in early 2020. And that actually resulted in 64 IEs in ED 70, 32 in 71, and 41 in ED 72. Now, if we do the math, it's 96 illustrative examples in revenue and 41 illustrative examples in transfer expenses. So definitely a lot of work put in by the board during that initial phase. So we thought it would be good to really leverage all that hard work that the board has already done, but really to do a objective approach, put on an objective lens in how we think about which of these IEs do we retain, what do we revise, what do we add, and what do we remove. And so we put a very high level summary here on the slide, a lot more details in the paper, of course, but we wanted to take this objective approach to really hold ourselves accountable to being able to justify the inclusion, revision, and deletions of IEs. Now, overall, we did this analysis for both revenue and transfer expenses, so we will walk through each of those today, followed by a page flip of the appendix, where we do have very large tables for both of these projects, but we thought it would be good to kind of do that analysis together. And to give the board some additional comfort, this was something the drafting group looked at twice in this quarter to make sure that we are really being as critical but objective as possible in considering what illustrated examples really would be appropriate to have in this final pronouncement. So we'll start with revenue. On the revenue side, and as detailed in the paper, we did note that overall accounting principles have not substantially changed since the EDs. Now, there have been changes in terms of the structure and a lot of clarifications and details that we are bringing in around the concepts and the principles within revenue accounting, but the principles themselves have not substantially shifted. Furthermore, we did note that the existing IEs, to the credit of the board, has already been public sectorized in ED 70 and 71. However, while they do illustrate relevant transactions, they weren't always prevalent transactions in the public sector. And so that was going to be an important lens for us to put on as we go through this analysis. Now, it should be noted that a lot of the examples that were in, especially in ED 70, were actually adapted from IRS 415. For example, on licenses or volume discounts, repurchase agreements, bill and hold, they are very private sector. And while we did find ways to public sectorize them, they may not actually be as prevalent in the public sector. The last thing we did know in this analysis is that some of the existing IEs were actually illustrating the same set of accounting principles. So for example, modifications of binding arrangements or principal versus agent. We often had 5 or 6 different illustrative examples. And so we decided to really, put a critical thinking hat on and say, do we need that many? Or was one of them perhaps, or a few of them, better at really describing the principles and illustrating the principles that we're looking for here? So really thinking about, do we need 5 if there were 5, or could we go with 3? And that would be sufficiently clear. Now, based on the analysis that we had listed in the appendix, overall staff had decided to retain 49 of the existing illustrative examples. And that will of course go through minor drafting changes as well for consistency with board decisions on the principles, on terminology, etc., and to make sure that they are still continuing to reflect and be consistent with the rest of the guidance we have written. We will be revising 14 of the IEs, and while they do still reflect principles that already exist, they could be revised to better reflect some of the board decisions. So for example, IEs that were related to scope differences between 70 and 71, well, we don't have 2 separate standards now, we have a single standard, but one of the important distinctions now is there or is there not a binding arrangement? So we would be pivoting those IEs to focus the tone of those IEs on identifying whether there is a binding arrangement or not. The last thing is to remove 33 IEs from the original list from the 70 and 71 exposure drafts. And those are because they did not meet the retention criteria. So whether they were not really prevalent within the public sector, they aren't relevant in terms of where we have landed with the revenue standard, or we found instances where IGs were better able to really illustrate or showcase the principles themselves, or that there were other IEs that better illustrated the principles that they were intending to illustrate. So overall, that would result in 63 illustrative examples. Now, on the transfer expense side, we also did the same objective approach to make sure that we are consistent across the 2 projects. And we've, of course, reached slightly different conclusions because they're very different projects. On the transfer expense side, we noted that accounting principles did actually change substantially. And that's, of course, as a result of board decisions and deliberations based on the constituent comments we received, which had some strong views about the original accounting we proposed in ED 72. Now, in ED 72, a lot of these 41 illustrative examples actually tried to mirror what we had in revenue, which didn't really make sense at this point because we wanted to be consistent in principle, but we really wanted to focus on using the transfer provider perspective in identifying what the appropriate accounting principles actually would be to account for your transfer expense transactions. So because of that, a lot of the IEs that were in 8072 were no longer relevant. And so because of that, essentially staff would be proposing new IEs to illustrate the revised proposals for transfer expense accounting. And in the rare situations where an IE from 8072 could still be useful, we will of course be changing them significantly to make sure they are fully aligned with where we have landed with the transfer expense IPSAS as proposed. Now, as detailed in the analysis and here on the slide, we have come up with overall the proposal to add 5 illustrative examples to, again, illustrate the revised principles themselves, and also to revise 6 of the existing illustrative examples to align with the current proposals and principles. We did want to note here that these 2 numbers are slightly different from what was in the paper where we proposed 10. And that was actually because Edwin had started looking at IEs after we posted and noted that one of these IEs that we were revising would be better split into 2 separate IEs so that we are more clearly illustrating the principles within each of those pieces. So that's why I guess on the audit side, those numbers will not tie out, but it will come up to a total of 11 illustrative examples for transfer expenses. So all in all, staff is recommending that we add 63 illustrative examples for revenue and 11 for transfer expense. Just as kind of a number crunching exercise, that is actually a reduction of 33% of illustrative examples for revenue and 74% for transfer expenses. So overall, as mentioned earlier in the presentation, we would be working on the drafting for that over the next few weeks in preparation to discuss with the drafting group and to bring things to the board by exception in March. But with that, I will pass it back to the chair and to the wider board to understand whether you agree with the detailed proposals within the appendices themselves. Thank you.
Okay, thanks, Eileen, for taking us through that. We'll walk through the actual Appendix 1 to Agenda Item 9.2.3 in a moment, really just to make sure that we pick up any specific concerns. I just wanted to take any questions about the process that's been operated thus far before we look at the detailed outworking of that. So over Adrian, you're first, and then Todd.
Thank you, Chair. Yes, I have a comment on the process, which might sound minor, but I believe it is not. It's when reading that sentence, provide additional guidance when the principles are not already sufficiently clear in the drafted authoritative guidance. I'm not comfortable with that because what I understand from the work of this board is that we work out the standards so that at the end of the day, we have principles that are clear. It's not that they are not clear in the authoritative core text. It's that they are not easily understandable, or the application is complex or complicated or whatever. So I would be worried if at the time we would have to approve the standard, principles in the core text in the authoritative guidance are still not clear.
It's a fair comment. Ross, do you want to come back on that? I suspect it's a description rather than what actually exists in practice.
Yeah, I agree with your point, Adrian. I think maybe the better way to put it for clarity's sake is to clarify the application of the principles.
Yeah, I mean, that's it. And whether, that's why we're proposing the reduction, because actually with the number of IEs that we had, actually that's obscured rather than supported clarity. Okay. I mean, genuinely, I think that's the lens that members need to look at it through. Is there anything that you don't feel is sufficiently clear? Because we've worked a lot on the authoritative text to make sure the principles are articulated. And so there is a balance on this. But I think this is just a description issue rather than an issue of substance here. So, I mean, back on that, but I think, it's just the wording that's been used by staff in the paper rather than anything else. Okay. I mean, I don't want to have a debate about English here. It's been through a thorough process is the message, I think. So Mari and then Abdullah.
Thank you. I have a very basic question about the criteria, and I agreed with the principles to which is to retain and or not. And however, the principle criteria is so abstractly described, and so the individual cases are so different, and it is difficult for me to understand the fact pattern is prevalent globally amongst public sector entities. And so the individual cases which is retained and which is removed, the reason why will be clearly stated, I think, from my point of view. Thank you.
Thanks. Eileen, do you want to come back up?
Yeah, and I guess just as before I quickly respond to Mari's, in terms of Adrian, your point, I can confirm it's, I think, a drafting matter on my end when I wrote it. It wasn't meant to say that principles are unclear in it. It's more to focus on areas of the model that could be complex and where this additional support through illustrating, application to an example might actually be useful to kind of help showcase what it would look like on a practical perspective. So that was the intention, not that we're saying that, the board hasn't done a good enough job in making the principles clear in the authoritative text. In terms of your question, Mari, about what we mean by, case facts that are prevalent in the public sector, what we were really trying to get to there is to really think about the examples that we had, particularly the ones from IFRS 15 that we adopted into ED 70. It was a really actually good point from the drafting group that reminded us we need to think about whether or not, yes, fine, the example is relevant, but is it a really rare transaction that we see in the public sector? Because if so, yes, it's always great to provide that guidance, but do we really need that much? Because one of the themes that we saw in comments was that, we have so many illustrative examples, and it was really easy for those really fundamentally useful ones to get lost in the volume, essentially, of all the examples that we do have. And so we thought it was important to really focal on what illustrative examples would actually be more common to illustrate common transactions within the public sector, and therefore increase the usability and effectiveness of communicating how principles might apply in practice. So that's where we were really trying to build that lens in to help us try to maintain or manage the number of examples we have. But I can say when we do write the BC relating to the decision coming out of today, we will try to be as robust and clear as possible about how the drafting group and the board then decided to really use that objective lens.
Thanks. So Abdullah and then Lynn.
Thank you, Chair. And I'm with the idea of having more IEs. It's always helpful to have more IEs. And my comment would be on why did we remove the examples on the transfer expenses? I like the idea when they were mirroring the examples in the revenue side. From my perspective, it's coming from the application. Two different entities that would be using the transfer expenses standard other than the entity using the revenues standard. So the more IEs that we have, I would love to have more IEs if it's possible.
I think we have a balance to strike, Abdullah, and if you like, the reduction is a reflection of the fact that it's a much simpler standard now than it was before. And I think, that's where, in looking at the list that's proposed, I think board members need to have a look at the flow through from principle through implementation guidance to implementation examples, that we shouldn't just have IEs for the sake of having IEs. That's why we're going through this principle-based approach to it at the moment. So I think if there are genuinely, areas where you think additional clarity could be provided, then, it's worth suggesting that, but we should not provide reams of additional examples just for the sake of having them, I think is the point. There is this real danger that we see that, people always want more examples, but actually they end up muddying, they end up being regarded as rules rather than principles. So that's the balance that we strike. So, where there is a genuine need, then that's fine. But I think we need to exercise that actual, do we need it or not? Edwin.
Yeah, and I'll just add that some of the examples in ED 72 were very much just mirrors of ones from ED 70. So previously we had examples on things like bill and hold transactions from the transfer provider side, which really, if you step back, it doesn't really fit into the new model anymore. And a lot of the examples also related to, for example, giving away film rights, which really doesn't happen, at least based on my understanding anyway. So we'll get more into it when we walk through the tables. But I think what we've done is we've really tried to look at the principles that are in the standard now and say, do we have examples to walk through each of the key principles? And that's what we did to come up with the 11 ones right now.
Thanks, Lynn.
Thanks. So I am really supportive of reducing the number of illustrative examples. People will always want more. It's a bit like kids wanting more Christmas presents, but you don't give them everything on their wish list, do you? But what did strike me when you were speaking, Eileen, is how we explain it in the BCs is going to be quite important, because it doesn't mean that they were in some way inaccurate, the examples that we previously had. Not that we want to refer people to go back and look at the ED if that situation applies to you, but we need to make sure that we don't give inadvertently the wrong message, which was, you could interpret it as us thinking they were no longer relevant. I think in the BCs, we need to be very, very careful about how we explain the reduction, and it's not that they weren't relevant, they just weren't relevant enough and could clutter the final output.
Thanks, Lynn. So we are going to walk through the basis for conclusions in both standards. So I think when we get to that, if we can pause over that drafting and say, bearing in mind the discussion and the thinking that board members have raised, actually, have we clearly enough explained, firstly, why we have IGs and IEs, and secondly, why we've gone through the process and therefore we've actually reduced the number. So I think it's both things. It's the positive, which addresses Adrienne's point, but it's also then why we've reduced the number for the various different reasons since the exposure drafts. Okay. So with that, I suggest what we do is we now walk through the tables in Appendix 1, which gives the more detailed reasoning and shows members how the overall guidance hangs together between core application, implementation guidance, and then the result in terms of the implementation example proposals. So we're just going to do it on the paper. Okay, so with that, where we are is page 27 of 205 in the revenue and transfer expenses paper, and that's page 4 in agenda item 9.2.3. So are there any comments on the proposals there? Okay, so if we can move on to the next page. So this is page 5. Okay, page 6. Page 7. Page 8. Page 9. Page 10. Renee, sorry.
Yes, thank you. So it is in relation to the capital transfers examples. So I've had some back and forth with staff on whether those illustrated examples are properly reflecting some of the key principles on capital transfers. And I think that so the 4 examples that we reviewed back in July, they are good examples, so let's park those aside. So the concern that I have in terms of bringing forward clarity is the principle about the fact that a capital transfer can be a transfer of a resource, cash, or another asset. That's how we defined the capital transfer. However, we also clarified, I can't remember when, and you may help me, remind me exactly when we clarified that the physical transfer, the contribution of an asset in kind just to be used in operations is outside the scope of a capital transfer, right? Because that asset is then not going to be used to create another asset, either by acquiring, constructing, or developing another asset, which is the key principle of a capital transfer. So, and I think at the one at the very bottom of page 33 is addressing when a good in kind received as revenue, right? So that will be the example where we do have the transfer of an asset that is not a capital transfer. And then we will clarify in that example that it's an asset that has to be measured at deemed cost. And then the opposite would be revenue, right? Now, the principle I would like to add is the flip side of that, is when you have a transfer of another asset, physical asset, what are the terms and conditions of that transfer that would make it a capital transfer? So we have to turn around and that asset, we have to find a scenario. And then we discuss this. I think those scenarios are remote scenarios. And the simplest example I could think of is I am contributed as a recipient wood beams. That's a physical asset. I would turn around and I would use those wood beams to construct a building. Right? So you're receiving a physical asset, you're turning around and you're using that physical asset to construct or develop something else. I don't know if it could be a piece of equipment that I then put into like a more complex piece of equipment. I think that's the type of scenario that we're talking about. And it's very remote and it took me a long time to get there. I think that's what we're trying to scope in. But I find it would be useful to add an example on that particular, to demonstrate how another asset in the definition can lead to a capital transfer. Thank you.
Thanks, Renee. Lindy, are you on this point then?
Yes, thank you. We can give you examples because it could be where you have to build a tunnel for a train and they give you the cash and they give you the thing that makes the holes. So they give you the piece of equipment to do it as well, or there are programs where you're giving farming equipment as well as cash and you have to do something with it. So we do have those type of arrangements.
Okay. So I think if you can work with Renee and Lindy on that, it seems like there is a case to add an example there. Todd.
On the same point, and it's while we're talking about this, it does come up in the implementation guidance as well. I think the very first one, A1, deals with this issue as well. So we need to think about it across implementation as well as illustrative examples.
Yes, Todd, I had provided some offline comments on how to improve those IGs. As
Okay, thanks. Thanks for that. Okay, so then with that, we move on to page 11. So that takes us through revenue with that one addition. And then we move into transfer expenses, which is page 12. And page 13. And then page 14. And page 15. Okay, so those then with that one addition are the list then of implementation examples that will appear in the final draft standards. And those will be worked through in the drafting group for review by exception by the board. Okay, so move us on then to the next item.
Thank you, Chair. So the last item, and I'm happy to announce that animation seems to be back now. The last agenda item 9.2.4 is more of an informational paper about the process that staff are proposing to take on in terms of the amendments to other IPSAs. So this is the final section, if you will, of the overall proposed IPSAs for the two projects. Now, amendments to other IPSAs are authoritative guidance, and they overall are intended to reflect changes that are required to the existing IPSAS as a result of a newly approved standard. Now, typically these changes to existing IPSAS are about references. So for example, replacing existing or adding new references to appropriately refer now to revenue or transfer expense IPSAS. But they also may propose some additional guidance to these legacy IPSAS depending on the new principles that have been introduced by the projects. Now, as the board may recall, we did finish discussing all principle related issues and made those decisions in June for revenue, and we finished them in September for transfer expenses. And so at this point in time, it was a good point to step back and really think about how the principles we have landed on in these two projects could potentially have implications for other IPSAs. Now, on the revenue side, as noted earlier and in previous presentations, the principles themselves have not substantially changed, but again, we have changed the structure, the presentation, clarifications to principles, and obviously one key part is there are not two revenue standards anymore. It is one standard, which again makes a lot of changes in terms of scoping in these other IPSAs. And for transfer expenses, we have made substantial changes, not just to principles, but also to the structure and the timing recognition, et cetera, relating to transfer expense itself. Now, when we really thought about what these changes meant in terms of implications on other IPSAs within our literature, staff noted that we don't expect the changes in either of these projects since the ED phase to have any major impact on the interaction with other existing IPSAs. And so our approach moving forward for Q1 is For revenue specifically, to combine the amendments that were originally presented in 8070 and 8071 into one population of amendments. And moving forward, for both of these projects, we will be revising these amendments that we put together in the EDs for consistency. So to update any wording, terminology changes. On the revenue side, obviously, we're using compliance obligation now rather than present or performance. Putting emphasis on binding arrangements. We now use transfer rights in the transfer expenses. And there are some other wording changes that have, gone through in the last year and a half of drafting this with the drafting group and with the board. So we'll be making sure to make those refinements in the existing amendments that were previously put together. The next part is to consider what the amendments to IPSAS 17 is. Now, because we do have that active project right now, which the board will be voting on tomorrow, we did want to make sure to reassess the amendments that were originally proposed to IPSAS 17 and make sure that we are looking at the final version that is being approved and to then make amendments based on that final version for version control purposes. The last part of our approach will be to consider amendments to any new IPSAS that have been issued since the EDs went out in February 2020. And that specifically is IPSAS 43 leases and IPSAS 44, which is non-current assets held for sale and discontinued operations. Now, as with all of our processes for drafting, staff will be working actively with the drafting group in Q1 to make sure that we are reviewing and revising these proposed amendments and therefore be bringing a final version to the board for review and for approval in March. So with that, I'm happy to turn it back to you, Chair, for any comments from board members on the approach.
Okay, thanks, Eileen. So open up for comments for board members on that process. Yeah, Lindy.
Thank you. Not to be a Grinch in the room. Just in looking at just revising and combining the transitional provisions that were exposed, maybe just to understand your thinking. So one could be, okay, well, if there's a standard that requires you to recognize revenue, you could then just say, okay, point to the revenue standard. But do we then think about a bit further and say, okay, but which part in the revenue standard? Would that be helpful? So for example, if we're in financial instruments and you need to go to the revenue standard, would we then say, okay, it must be binding arrangements or that part, because it would be important for the preparers to know that automatically without having to think, or if we know that it could be subjective, they'd have to apply their minds. So therefore we just refer to the revenue standard. So I guess the question is, what level of detail would we then put in the amendments? Just the standard, or do we think it might be important in some instances to refer to which component when it comes to revenue? Thanks.
Thanks, Lindy. Ross.
Off the top of my head, my initial reaction would be, I think we should be cautious on that because it is a complicated model that requires assessing from the beginning. And if we point them to specifically jump to a part in the revenue standard, there might be considerations they need to make to fully understand the transaction. And kind of in support of that, I don't think we normally get very specific when we refer to another standard. You know, we do in some cases, but I think in revenue, it would be quite odd if we did that, but we can look at it case by case and keep that in mind when we review them, if it might be appropriate.
My only concern really is like on financial instruments, perhaps we don't want them, maybe you get to the same answer, but maybe we want them to get to an answer that would be correct. And I think, so that's the only example I can think about really, but I just wanted to know if we would think.
On that though, I think we would have already considered that when we put the links into the current revenue standard. So we will consider whether we'd give specific guidance, but if we were doing that in financial instruments, we'd already be doing that to specific parts of either 23 or IPSAS 9.
Okay, any other points? Good, okay. I mean, it's a very important part of the finalisation process. And that looks like an exhaustive way of actually approaching it. So thanks for outlining that. Okay. So with that, I think we're ready then to move through and look at the basis for conclusions and the drafting of the implementation guidance then. And obviously we've got transfer expenses first. One thing I did want to do was just actually maybe just do just turn the pages in terms of making sure that whether there are any comments or questions relating to the amendments made in September. Edwin, I don't know whether you want to say anything on those or whether we just walk through.
I guess in terms of the changes, the only substantive change other than the BCs and the IGs, which we'll walk through, is really the presentation section. And it's not really that much of a stretch from what was presented in September. Essentially, what I did was I just took the bullet points from my paper and rewrote them so that it fits the tone of a standard. So the principles and the details are really the same as what we've discussed before.
Okay, that's helpful. I mean, I think we might just as well just make sure we picked up any questions or concerns, and then obviously, you know, that's more by exception. And then when we get into basis for conclusions and the IGs, then we'll go somewhat slower. So if we just start in terms of the page 2, which is page 44 of 205 in the paper, which is the sections on objective and scope. Any residual points there? And then we move into the next page, page 3, which is definitions. And page 4 through to paragraph 10. Oh, Renee.
Yes, just picked up on paragraph 7 when we refer to the definition of expense in IPSAS 1.
Can you speak a bit closer to the mic?
Yes, I'm sorry. So picking up on paragraph 7, where we refer to the definition of expense in IPSAS 1, there's also the different definition of expense in the conceptual framework. And I think elsewhere we refer to the definition of in the conceptual framework, maybe on the revenue side. So maybe just a placeholder there for staff to look at this. In principle, it doesn't change. I mean, I think the definitions are achieving the same thing, but just a little point.
Ross, I don't know if you, I mean, we have got a challenge in terms of standards level versus conceptual framework. I don't know if there's anything you want to come back on that, or whether we take that offline. Okay, we'll take that one offline, Renee. Okay. So then anything on page 4? Then page 5. Oh, sorry, Leanne. Apologies. I'm looking around the room and not. Where are you?
Yeah.
Which page are you on?
Yeah. I refer to paragraph 8. Paragraph 8, the newly added sentence. I see that it is stated as alternatively blah blah, but I think here actually the logic here is maybe it deal with 2 matters. The first one is on the debit side, that is if it meets the definition of assets and the meets the recognition criteria of assets, then we should recognize assets. If not, we should record an expense. On the other side, for the credit side, if there is an obligation, then we should recognize a liability. Otherwise, we will wait to derecognize the assets, the resources transferred. So I think the logical here is not alternatively. So maybe we can make these two matters maybe more clearly. This is my suggestion. Thank you.
Thanks, Liang. Edwin.
Yeah, I think we can clarify that it's almost like two separate situations,
Yeah,
right?
yeah,
So I'll change the word alternative, well, rephrase the word alternatively to make it flow better. Yeah.
Yeah, find an alternative on that. Ross.
If it is two separate thoughts, let's consider using A and B as well to split it out.
Yeah, that would certainly be clearer because it is an important paragraph. Okay. Thanks, Liang. So we'll move on then to page 5. Then page 6. Page 7. Lindy.
Thank you very much. I was wondering if we could think about combining the derecognition and impairment together. That's on page 10 and on page 7. I think it might be good to first think, well, do I derecognize or impair it? Thanks.
Edwin, back on that.
The different asset.
Yeah, I guess originally I had the same thought, but impairment is really measurement. So I guess that's why I split it out into the measurement section. But if the board is more comfortable combining them, I can certainly move the two paragraphs together.
I mean, it might be that there's some sort of cross-reference or something like that, but I think what you're saying, Edwin, is you follow the logic from the framework.
Yeah.
So I think we should be clear that as far as possible, we are following the logic in the framework. I mean, maybe that's something to just reflect on offline, whether there is something that can be done to either clarify, but I think we should follow the logic flow from the framework if we can. Okay, so if you can deal with that one offline. So then we're in page 8. Page 9. Page 10. Page 11. Page 12. Okay, so then we move into the application guidance, page 13. Page 14. Page 15. Page 16. Page 17. Page 18. Page 19. Renee.
Just back on page 18, the text that was added there for transfer, I may just want to circle back to staff there for maybe some clarification. Don't need to use board time for that.
Sorry, where were you?
We're back on page 18. So this is the new text that was added at AG 30, AG 30. So maybe opportunities to clarify there, not changing the principles. I'll just circle back to staff on that.
Okay. So I think we're back on page 20 now. Page 21. Page 22 is where we move to basis for conclusions. So we'll start to walk through basis for conclusions. Page 23. Page 24. Page 25. Page 26. Page 27. Page 28. Yep, Camilla, you're on page 28.
Yes, thanks, Chair. I have just two minor comments. In BC 27, I was wondering whether we can be more specific when we are saying that face the consequences. Do we want to be specific on saying return the resources to the transfers provider when they're, yeah, that is one. And my second comment is on BC 28, just for clarification, this new transfer right asset, that means it will be accounted as an intangible asset according to IPSAS 31. I just wanted to confirm that for my understanding. Thanks.
Thanks, Camilla. Edwin, back on those 2 points.
Yeah, so we did receive comments, I think from Scott, on how to rephrase the face the consequences part. So it's we're planning to change it to comply with non-compliance requirements, just to be more specific. And then for the point on the transfer right asset, we didn't really discuss whether it was an intangible or not, but I mean, sitting back, I think it would be, so I can clarify that. Yeah.
Ross?
Thought we'd kind of discuss that. We agreed to just be silent on it, so I don't think we should be specific.
Okay, so if you can just check back on that and make sure that we are consistent with what was decided. So we then are on page 29. Page 30. And then page 31 is where we move into the implementation guides. Yep, Camilla.
Thanks, Sherry. Page 31, I have two comments. So the first one is on A1. It's related to René's comments. For me, it was also difficult to identify which kind of example. I only thought about transfer of land that could be considered like a capital transfer, because if you are given the land, you can construct or build something on there. So that could be another example to add or consider. And my second comment is in B2, enforceability. So we have a specific sentence that we are saying in cases where an entity doesn't have a binding arrangement, it may still have an enforceable right that should be accounted for appropriately. And this is a bit contradictory with C1, because the principle we are starting from is there a binding arrangement or not whether if there is enforceability or not. So I think we should be careful on that and not contradict ourselves. Thanks.
Okay. So if you can work with Camilla on those clarifications. Okay, so then we're on page 32. Page 33. Yep, Camilla.
Yeah, sorry, I'm still on page 32. I had just a question on B3, enforceability, transfer subject to appropriations. Whether can an appropriation give right to a transfer expense? My question was if from the transfer recipient perspective, if from one side, from the transfer provider, they can recognize a provision, would that mean that also based on that appropriation, the transfer recipient is allowed to recognize an account receivable based on that appropriation? It's just a question of how can we think about that?
Edwin.
Yeah, so they would not be able to, because the basis for recognizing a liability for the transfer provider is IPSASB 19, and it's where provisions are recognized. But in IPSASB 19, it specifically says that you don't recognize the contingent asset, which is essentially the flip side of that. So I think in revenue, we actually say that, right? Or yeah.
Yeah, I was going to say, presumably we've got that flip side there. Okay, so back on page 33. Page 34. Yep, Camilla.
Thanks. Just in page 33, I think in when we are having the A, B, C, the wording could be improved. It's not clear for me who is the enabling authority or the approved enabling authority. So it's a bit of wording there. It's not so clear. Thanks.
Okay, thanks. I'll make that clarification. So then page 35. Oh, sorry, Claudia, missed you.
Sorry, I was a little bit late, so sorry. It's on page 34, C1. We are talking about transaction without binding arrangements. And then we say, however, it's positive for an entity to have in one way enforceable right. And I thought we had enforceable rights only in binding arrangement. Could we really state it in this way, or we can use another wording like if they have an obligation or IPSAS 9, it's IPSAS 19, it's relevant. So I'm wondering, so it sounds a little bit strange.
You have any immediate reaction, Ed?
Yeah, I can work with Claudia to come up with something, but that was specifically an example that we got from the drafting group members from, I think, the UN. So yeah, I can work with you to make sure it actually flows better.
Eileen?
Yeah, I guess just to add to it, because I know, Claudia, you mentioned at the beginning of your intervention, like, is it possible to have an enforced right when you're not in a binding arrangement? And the one thing I think the UN found really helpful, and I think, you know, staff and the drafting group have tried to really refine in the wording, is that a binding arrangement requires both an enforceable right and an enforceable obligation. So each party has both. But technically, if you kind of think about your check boxes of, do you have an enforceable right? Do you have an obligation? Do you have da-da-da? Then if you don't have an enforceable obligation, you could still have an enforceable right. And so the idea behind, well, the discussions we had with the UN and also how we thought about, you know, illustrating the principles in these non-authoritative guidance is to showcase cases like this where you might have an enforceable right, but you don't have any obligations. And so in this case, that was the, I guess, the clarity that Edwin was trying to bring into that example. That being said, I think if there's better wording we can use to clarify the text, the guidance, then we could definitely work on that offline. But on a principle basis, that's kind of where we were trying to get to when you're in the non-binding arrangement space.
Okay, thanks. Yeah, so if you can work on that offline, but also make sure that we cross-check we've not disturbed anything there. Good. Okay, so then we move to page 35. Oh, Camilla.
Thanks, Chair. On the section E, recognition of transfer expenses from transactions with binding arrangements, I just wanted to highlight the concern that I find out in this national accounting event in Spain. So they were a bit concerned about changing the status quo of trying to defer the transfer expenses based on the fulfillment of the compliance obligation. And also I heard something similar for focal countries, because this integration between budget and accounting, because budget requires that if you have the outflow of resources, you should execute the transfer expense in that moment and not defer it in several years later on. In Spain, what they were proposing or suggesting is that an accounting treatment similar to social benefits, for instance, that the transfer expense is recognized in the moment in which the transfer recipient fulfills the criteria to receive the transfer expense. But I think, yeah, we could work around with the transfer. Even if you execute the transfer expense in that moment, you could still have control on that with the transfer right assets. So I think we could think about that. Thanks.
Edwin, back on that.
I think based on what you've communicated with us offline before, it still would fit into the model. So if you have a situation where the person who's getting the funding already performed whatever it is to qualify for that funding, under the current model, you would say, well, they've already fulfilled their compliance obligation. So essentially, on day one, when you set up the transfer right, it's already immediately extinguished and you would just expense it right away. So I think you get to the same answer. It's just there's different steps to get there or different thinking to get there. So.
Yes, that in the case where the transfer recipient is proactive and complies before, but what is in the public sector, there are transfers that are like advance payments. So you first transfer and then you expect that the other party complies. So I think in that situation, we should look for a workaround or something to don't defer that transfer expense until years later. And yeah, thanks.
Yeah, I think it really comes down to, well, does the transfer still have control of those assets, right? And I think one of the things we've tried to do is kind of move away from rules. So right now, like the way we've set up, it's really, you have to think about, well, you could have a situation where they're starting to comply or starting to perform, but not completely. And that's why in the standard, we have guidance that says, well, if you've already transferred the funds, they might be partially completing the compliance obligation, and that would require you to partially de-recognize part of the asset. So it's not an all or nothing in our model. I think we really want people to step back and think, well, do you still have a right there that you control? And if you do, like, you might not necessarily expense 100% of it, but you could expense a portion based on what has already been performed. So that's what we've been trying to do.
Yeah, I mean, this feels like the sort of kind of pre-funding. Is that the sort of example that we've been trying to deal with working with the European Commission? So, I mean, it might be worthwhile just working that through again and make sure whether there's anything, just, you know, something additional that would provide that clarification. But again, you know, the Commission has been involved in the drafting group. So I think what we've got will, you know, work in the various different situations that they commonly find, because this is very common for them. It's been one of the challenges to work with that. Lindy.
It could maybe be useful having a flow in this to say, well, you know, you could have this right, you could impair it even on day one. I guess you could impair it, you could de-recognize it when they perform, or it could be changed into a financial asset. So it might be useful if there is some sort of flow that helps the decision making for these type of arrangements, if you have time.
Okay, then.
I was trying to frantically see if you've got an illustrative example that might help. Or maybe this is something that could be an IE.
Yeah, so this is one of the IEs that we're proposing to add to go through the whole flow. Yeah.
Okay, thanks. So I think that's probably the answer, that actually we need to see whether there's any additional, if you like, logic flow that can be built into the way the IG works, and then how that works with the IEs. Thanks. Okay, so that was page 35. Then we move on to page 36. Yep, Camilla.
Thanks. In page 36, there is, after the numeral C, so the second paragraph, there are an example that there could be situations where resources are passed through series of entities before being transferred to the ultimate transfer recipient. I think what we are proposing there, it sounds good in theory, but it's too difficult to implement in practice. Usually, if there is one transfer provider is giving the resources through other several entities, they disconnect or they recognize the transfer expenses when they provide the resources to the first recipient. And then this recipient will control when they provide the resources to the final beneficiary, because how we are proposing it here, it's like, it would be the ideal world, but it would not work in practice. Thanks.
Yeah, so I guess this example was actually from the European Commission. So they were giving us scenarios where, you know, it's almost like for administrative purposes, it was going from entity to entity, but then really the ultimate satisfaction of the compliance obligation by the end was really what drives the extinguishment of the right. So they kind of wanted us to get across that, yes, you might have a situation where each step results in an expense or a revenue, but there might be arrangements that are set up so that the arrangement itself says, well, no, the right that you have is really holding the last entity accountable. So this is really just saying, you know, it's not saying you look through in all situations. This is just saying if the terms of the arrangement tell you that entity X is the one that's ultimately accountable, you really have to look to that entity to see whether the compliance obligation has been satisfied, to see if you still have a right. Like, it's not really saying in all cases you have to look through. Yeah. So maybe I can clarify that.
I was going to say that sounds like there might be a tweak or something that's required just to make that point. Todd.
Yeah, I think it's clarity that's needed here, because I can think of examples where, yes, there will be a number of entities through the process, but if the first one isn't really holding the second entity to account, then it will treat it as an expense. But by the time you get to the last entity that's providing it to the one that's going to have to comply, if they set it up in a way that they do need to, then you will have an asset that you recognise until the obligation's extinguished. So it's very circumstance specific, I think, and you need to think of it at each entity level as you go and what the actual nature of the arrangement is. Just because the first entity might want something done, if it isn't set up in the right way through the process, there could be expenses through that process. Yeah, as clarity is needed, I think. I
think that's right in terms of we need to make sure that that point basically comes out in the drafting. And as you say, it will be agreement specific as to whether that chain works or not. So I think that's a clarification that's required to make that conditionality clear. Okay, so then final page 37. Okay, so I think with that, we're through the basis for conclusions and implementation implementation guidance. Lucy.
Thank you, Chair. Just a minor comment. I have noticed that we have conspicuously used the terms transfer consideration or purely consideration. Also, I have similar comment in the revenue where we use transaction consideration or consideration. So I suggest that to avoid confusion on the usage of this in different contexts, I think we have just to be consistent on the terminology, especially when we combine already the two standards. Thank you.
I lean back on that because we obviously have had a look at terminology on a couple of occasions.
Yeah, I guess just as a bit of background, if you will, because when we were, well, I guess maybe from the revenue side, that this is the most prevalent, where in 80, 70, and 71, we used a lot of different terminology. And so when staff and the drafting group was working on this earlier in the year, we actually went through an exercise where we basically collated all the different ways we were trying to describe the same thing. And we tried to land on more consistent terminology, one of which was using transaction price in 80/70 didn't feel very public sector specific per se. It felt very commercial, especially now that we only have one revenue IPSAS. And so the drafting group had actually proposed that we move to transaction consideration. And that's why you see that terminology there. We have kind of gone through some processes that we've been refining the definition to not say transaction consideration is the consideration of So there might be a bit more cleanup that we can do. So Edwin and I can take this offline and just make sure we build more consistency where there is lacking. But if there's anything specific you found, Lucy, do let us know and we can make sure we address those specific points. Thank you.
Thanks for that, Eileen. Okay, any other points then that we haven't picked up along the way? Good. Okay. Well, that feels like we're in good shape then on transfer expenses. We will need to move then next into revenue, but I suggest we take a break at that point in time and that come back at 11. Okay. Thanks, everyone. Okay, so we move on then into revenue, and we thought if we just do the same process as we've gone through with transfer expenses, because there are a few amendments through the authoritative text. So we thought we'll just walk through that. And then obviously, as we did with transfer expenses, particular emphasis then on basis for conclusions and IGs. So we are on page 82 of 205. So that's page 2. And then we've got some changes on page 3. Yeah, Patricia. Sorry, you're on it and you're already on page 4 then. Okay, go ahead.
Thank you. I have a discussion with Ellen about the standalone definition, and I think the definition is not aligned yet with the compliance obligation. My suggestion here is because the compliance obligation, the definition is the entity use resource internally for distinct goods or services. I think it's necessary to use the same terminology. And there are consequences in other paragraphs. It's my thank you.
Thanks, Patricia. So, Eileen, is that something that needs working through then?
Yeah, and just I guess for clarity for other board members, Patricia and I have had a bit of a conversation on this just to make sure wording is consistent throughout our guidance, because we have gone through so many revisions. So Patricia, maybe we can work offline to kind of pinpoint the remaining areas where we can bring some more consistency between terms. Thank you.
Okay, so that probably needs to just come back once you've worked that through, just come back as a specific item so that we know how that's been worked through. Yeah, Renee.
Yes, thank you. I have to apologize. Can we go back to page 3, the definition of a capital transfer? So we were just reflecting at break all of the nice work we've done to clarify what a capital transfer is and isn't in the case of another asset. We were wondering if maybe here it would be useful to tweak that or another asset with the specification that it is used by the entity to acquire. So the concept of using what you receive to do something with it. So I'm not sure. So how we do it exactly is up for discussion, but that principle, if we could clarify that, I think it would be useful. Thank you.
I just want to advise some staff on, you know, whether we've explicitly looked at that, because I don't know, I can't remember the history on that. Eileen?
In terms of the definition of capital transfer, just from what staff looked at as we were revisiting this too, it seems like it was a definition that we created, I think even back in the CP phase, and the board had kind of refined it over even the ED phase as well. That being said, I think it was originally intended to address those very specific type of transactions where you get something and then you got to do something with it that results in a capital asset. I guess in terms of clarifying the wording itself, I think if we as a board do agree with those refinements to the definition that Renee proposed, I think that could still be something we clarify, in our core text in that definition. So I guess just a question to the wider board, if we think those wording changes would still be, would bring more clarity that we are currently looking for.
I mean, my suggestion would be that where we've got these items, which basically, I mean, the trouble is when we start tinkering with a definition that's been there for a long while, then there are a lot of consequentials throughout, and we may end up with unintended consequences because we've balanced off various things in getting to a definition. So my suggestion would be that actually we have a look at that offline, because I think we need to just look at these on a case-by-case basis and be very careful if we make a change. So I would not make the change at the moment. I think it's a specific request to have a look at that. And my suggestion would be that staff work with Renee and that if it is recommended to make a change, that's brought back for the check-in meeting before we start to implement throughout the document. I mean, clearly we'll need to have a look at that, but I think we just need to be very, very deliberate at this stage about whether we make a change or not, given the long history. And as you say, I mean, we started this in 2015. So a lot of this has been through quite a long period of gestation, and a lot of debates backwards and forwards have been had. So I think that, you know, particularly on definitions, I really want to be convinced that we need to make a change at the moment. And obviously we've exposed this and we've got support for it, etc. Although, you know, recognizing the point you're bringing up, Renee, but that I think we have to go through that deliberative process at this stage if we're going to make a revision. And I think that probably is the same process as with the point that Patricia raised. So I would do that and be clear about the reasons for the change and why it's not been picked up before, but then also what the consequentials would be of that. That's okay. Eileen.
The only thing I'd add, if you agree with this proposal, Chair, is to bring this to the drafting group again, because we did actually discuss this definition with the drafting group in I think it was Q2 of this year as well, just to make sure that we were comfortable with it.
Yeah.
And at that time, the drafting group was okay to keep the definition as is. That being said, I think today we did go through a few like examples on a practical situation of what do these capital transfers look like in different jurisdictions. And I think reflecting on those and writing those IEs might help us to, you know, really take a step back and just confirm again.
Yeah, well, I think that's right. And I think that does, you know, it's that process where you put it end to end and say, this is the implication of this. And certainly if you can do that in time for the drafting group to have a first look at that, that would be really helpful. And then we can decide whether the proposal comes through to the board or not. But again, I would not make changes in advance of that board decision, just because I can see that this is going to ripple through. Okay, Lynn?
It's a minor point on the definition of a capital transfer. In the transfer expenses standard, we have the words in advance of it from the transfer provider's perspective. I think we need from the transfer recipient's perspective before we have the definition of capital transfer.
Okay, so, you know, I think that's each of these, we just need to be very, very clear. And I'm not saying we shouldn't, but just very deliberate at this stage. So, okay, Lucy.
Also on the definition of capital transfer, I just suggest the repositioning of the clause from a binding arrangement, because in the transfer expense, it is defined as an outflow of cash or another asset that arises from a binding arrangement. Whereas in the revenue, it is a capital transfer, is an outflow that arises from a binding arrangement of cash or another asset. So just reposition the clause or be consistent with the definition. Thank you.
Thanks, Lucy. Okay. I mean, I think those underline why we're actually reviewing both documents alongside each other at the moment, so that we can make sure we've got those. Okay, so we move on to page 4, then page 5. Lucy, you're in, or page 6. Page 7. Page 8. Page 9. Yep, Liang.
Thanks, Chair. Actually, my comment is on page 8. Page 8, paragraph 27. Here we say an entity should continue to assess the revenue transaction and any received inflow of resources. I think here maybe we should cover inflow to be received, because in some case maybe this will be recorded as a receivable. So in addition to the resources received.
Thanks, Liang. So I think if you can pass that that wording offline to Eileen, and then she can have a look at that and address it.
Sure.
Okay, thank you. So let's move on back to page 9. Page 10. Page 11. Page 12. Page 13. Page 14. Page 15. Page 16. Page 17. Page 18. Page 19. Page 20. Page 21. Page 22. Page 23. Page 24. Oh, sorry. It's where that camera is. Sorry, Patricia. Where are you? Which page? Okay, go ahead.
Thank you. In page 22, the paragraph 19.3, this paragraph is about compliance obligation to use resource internally for goods or services. And in my view, the item C is not applicable in this situation, because when the entity receives the entity entering in a binding arrangement to transfer goods or services, the goods or services was, for example, the goods was produced by in accordance with the specification of the third party. Then it makes sense to, if the entity does not have alternative use, it says in this situation. But in the situation that the entity is, the transaction is to use resource internally, the specification is provided for by the entity. And then there is a unused useful use. And then I think the paragraph C is not applicable for in this case, when the binding arrangement is about the obligation is to use the resource internally for goods or services.
Thanks, Patricia. Eileen, an immediate reaction to that, or is that something we need to
I think we'll take that offline, Patricia, and kind of talk through it further. Because I think you had noted it previously in one of our other offline conversations, but part of the reason why we didn't do anything initially was for consistency between how we're describing satisfaction of compliance obligations over time, but we can look into it further and connect with you offline.
Okay, thanks for that. So back on then page 24. Trisha, are you still in or okay? Page 25. Page 26. Page 27. Page 28. Page 29. Page 30. Page 31. Page 32. Page 33. Page 34. Page 35. Page 36. Patricia?
Yes, page 35, 161. I think this paragraph is incomplete because in some cases the assets may held for operational capacities, and then cash generate is not the appropriate terminology. It's only to verify. In my view, this paragraph is incomplete because it does not consider the possibility to have assets for operational capacity.
Are you proposing, Patricia, that we add a reference to IPSAS 21 as well for impairment of non-cash generating units?
Yes, and yes, I think it's okay.
Yeah, let me take that offline and I'll consider it further.
Yes,
Patricia?
yes, the text,
Yeah,
yes, but the idea is to include the possibility to not assets not held for financial capacity. Yes.
Yeah, we can look into that more because this paragraph hasn't really changed substantially from ED 70. We had originally brought that in without changes because it wasn't an area of concern for constituents. That being said, with the discussions we've had on measurement, we can definitely look into whether there's implications on just the references we're making here for impairment. Thank you.
Okay, thanks for that. So page 36. Page 37, page 38, page 39, page 40, page 41, page 42, page 43, page 44, page 45, and that's the end of the core text. So we move into the application guidance, and we're on page 46, page 47, page 48, page 49, page 50, page 51, page 52, page 53, page 54, page 55, page 56, page 57, page 58, page 59, page 60, page 61, page 62, page 63, Page 64. Page 65. Page 66. Page 67. Page 68. Page 69. Page 70. Page 71. Page 72. Page 73. Page 74. Page 75. Got some edits there. I think that's just some. Page 76. Page 77. Page 78. Page 79. Page 80. Page 81. Page 82. Page 83. Page 84. Page 85. Page 86. So we've got a gap where amendments to other IPSAS will come in. And then that moves us on to basis for conclusions. Now, remind me the significance of the grey shading, right?
Yeah, just for context, we explained this to the drafting group, but we didn't note it in explicit detail in here. We'd introduced it as part of the X 9.3.2. So the gray text is actually any BCs from ED 70 and 71 relating to discussions and decisions made by the board during that time that are still relevant to keep. And so we've highlighted them in gray here to show that they are existing board decisions that still remain relevant. Now, anything you see that is not highlighted in gray, those are either edits that we have brought in to refine or add in clarifications based on board decisions since the EDs, or are completely new based on the decisions that the board has made so far. So you will see a pretty large section in the earlier part of the BCs, I think maybe 3 or 4 pages down, that really go into the a really robust discussion we had over multiple periods relating to the decision to go with one revenue standard, moving to compliance obligations that focus on binding arrangements, et cetera. So that's the difference between the gray and the non-gray.
Thanks, Eileen, for that reminder. So we're on page 88 here. So page 89. Page 90. Todd.
Sorry, just on 88, 89, I wonder whether we can sort of bridge between BCs 4 and BCs 5, because we start referring to restrictions and stipulations, restrictions and conditions. And I think just a little bit of bridging might help for those that aren't necessarily that familiar. So I can talk to staff offline.
Yeah, I was going to say, if you can suggest some drafting, Todd, that would be really helpful. Okay, so then page 89, page 90, page 91. Yep, Camira.
Thanks, Chair. I'm in BC 13. So about the discussion with IPSASB CAC, I would suggest if we can be a bit more specific and include which advice was provided by the CAC, because I see the exactly same paragraph also for the other, for transfer expenses and for revenue, but it's too high level. I think we could provide just a very in 2 sentences what was the main message from the CAC, just for thanks.
Ross, do you want to come in on that?
Yeah, I think we've tried to avoid to get into details of the CAG discussion because we get reams of advice from the CAG and we take some and use it and others we don't. So I think we have the report back function of what we give to the CAG. And I think we want to acknowledge the discussions we had with the CAG. The CAG advice is implemented to all the decisions the board takes and is captured in the BCs and details. So I don't think this is about the accountability mechanism in our BCs to what the CAG told us or not. This should be about that we consulted the CAG and got the advice and it influenced the board's work. So I wouldn't go any more detailed than what's here. Just my recommendation.
I mean, I think for accountability purposes, we do say in quite a lot of detail in, the CAG minutes, how we've responded. So, if people are really interested, then they can actually go there. And I think that's the right way, because that's CAG advice. This is the board conclusions as a result of that. Okay, Lindy.
Thank you. Just to add to that, when we were looking at the leases standard, we made a decision not to include the advice specifically from the CAG. It was a strategic decision because we make the decision and we don't put in what the CAG said we must do. So
thanks, Lindy. So I think we are being consistent, which is always good. So then if we move on to page 92. Page 93, page 94, page 95, page 96. Eileen, did you want to just come back on them?
Yeah, just a quick note here in the blue highlights for pending. Just wanted to flag for the board that we will obviously be updating these BCs based on the decisions we made today on IEs. I did speak to a few members offline during the coffee break that, because it is important for us to communicate clearly that IEs are not authoritative. They don't bring in anything new. It's really just to illustrate an example. So we recognize the wording will be important here. So we will obviously be bringing that for board review in check-in or March, depending on when we have that time.
Okay, thanks for that. So page 96. Oh, Liz.
Thank you, Chair. But just a minor edits when you revise the BCs, because sometimes you use the board. So let's just be specific that it is IPSAS board, so that cannot be misconstrued with the other boards when we pick up boards in IEs, for instance. Thank you.
Thanks, Ceci. Right, page 97, page 98, page 99, 100, page 101. Yep, Todd.
Thanks, Ian. On BC 67, we talk near the end of that paragraph about fair value and linking it to property, plant and equipment, amongst other standards. And I think we're just going to need to reflect based on where we've got to through the discussions earlier in the week about the language in that BC now. So there is some work to update that, I think.
Thanks, Todd. A good spot, which shows you the problems we've got with all the various interrelationships at the moment. Page 102, page 103, page 104, page 105, page 106, page 107, page 108, page 109, page 110, 111, 112, 113, 114. Yep, Mira.
Thanks, Chair. I have a comment on capital transfers, TPCs 127 till 130 more or less. It is about another concern from this national accounting event from Spain, where they were basically a bit worried if they were to apply what are we proposing now for the recognition of capital transfers as revenue. They say that, okay, if they have compliance obligations, because the compliance obligation requires that they fulfill or construct the asset or whatever, they will be recognizing then in day one probably a liability, and that will have as an impact that they will have net assets equity negative. And then they were trying to compare that with IAS 20 and what they came out with several models from different countries. And so is that they were proposing to recognize first this inflow of resources as net assets equity. And then according to this asset being depreciated, then transfer or move that from the net assets equity to the surplus and deficit. So I think we could be clear, a bit try to differentiate what is the position of the IPSASB versus the IAS. So that is something that is not allowed under IAS, under the IPSASB's model. So thanks.
Yeah, I think you're right, Camilla, on that we do need to be very clear, because we have taken the thinking forward from IAS 20, which everybody acknowledges is an old standard. So Ross, I don't know if there's anything, I mean, I think we've tried to be very deliberate, but I think we should highlight that.
Yeah, and Camilla had shared some of this feedback with staff before, and we looked at it. I think we need to be careful sometimes when people share with us at events, they're kind of, I would say, negative reactions at a high level of what an accounting treatment might be, because when I reviewed that, I'm never really understood how you could ever have negative equity applying our model, because if you recognize the liability, it's because you've received the assets. So your balance sheet impact is zero. So I think we need to make sure we, clarify what the accounting is that they're reacting to, because I think they're misinformed on how it's even going to work. So I think the clarity in explaining the principles of our model is important, but also if people are questioning it and calling out the misconceptions that they're applying to it, because I think they're in their email, they've kind of picked up the wrong pieces of what we're proposing.
Thanks, Ross. I mean, I think from a public interest point of view, it's actually being clear about what the differences are between how, the compliance obligations and so on work versus IAS 20. So that factually, that's I think that's what we need to make sure we do. Okay. And then we're on 115, which is the end of the basis for conclusions. So is there anything else on basis for conclusions we need to pick up? Patricia.
It's not possible to verify the paragraph that Todd said about and the paragraph in the core text. But when changed I think probably this paragraph is related to the recognition of impairment. I'm not sure about this. I could do this in this moment, but when change it, check these if it's consistent with my suggestions, check with the consistent with the core text. Thank you.
Thanks, Patricia. So with that, we move into the implementation guidance. So we're on page 116. Sorry, Patricia, are you still in? No, okay. So page 117. Page 118. Page 119. Oh, sorry, Camilla.
Yes, thanks. I have just a comment on B4, the last sentence, when we are referring to IPSAS 41. If we could be a bit more clear and explain the situation in which this deferred revenue becomes a financial instrument that should be accounted according to IPSAS 41. Thanks.
Yeah, we can revisit that, Camilla, and see what additional clarity we can bring in, and we'll connect with you offline on that.
Great, thanks. So page 119, 120, 121, 122, 123, 124. So that's through the illustrative, the implementation guidance. So that's what we need to do on that. Any other points members want to raise on this at the moment? Ross.
I just want to take the opportunity to thank the drafting group in particular and staff for the amount of progress in between meetings we've been able to make using that process. I know there's been most quarters since the beginning of the year, at least one, sometimes two drafting group meetings. And it's been quite a difficult task to find times that work for everybody. And I thank the drafting group members for their flexibility, different times of the day, and really digging in and doing a good job in those meetings. They're very helpful for working through the drafting. And I think it's allowed us to land things so we can have a session like that where we go through everything and there's not a lot of, stray pieces. There's a little bit of cleanup, but I think it shows the progress we've made since the beginning of the year. And, I just want to record the thanks from staff on that to members.
Yeah, absolutely. Thank you very much. And I think it has been onerous this year, I think, in terms of, because of, again, it's back to this logjam that we're trying to move through, a number of quite big and important standards at the same time. So I think, that combined with the way in which staff have approached it is really helping us get to a good place on this. So, Eileen, Edwin, anything else we need to do on this?
No, just to echo thanks from Edwin and I for board members as well as drafting group, and we'll continue to make progress and look forward to next quarter.
Yeah, so in terms of next steps on this, clearly the two areas requiring work are the illustrative examples and the consequential amendments. In discussion with staff, I've asked if they can prioritise the illustrative examples so that if we can, the drafting group has an opportunity to review those and then we can bring those back to the check-in meeting for review by exception. I think that gives everybody a good opportunity to review and then for discussion as necessary, again, which puts us in a good place for moving to approval in March. So that, if you like, is the plan, and that would be the priority for both of the projects. That we've got that, and then it's really working through the consequential amendments. Okay, so with that, I'm wondering whether we should actually, we're contemplating that we should certainly give you back some time given the need to review some documents. But I think at this stage, what we might do is go into the first part of John's session. Okay, so thank you very much, Eileen and Edwin. Excellent work. And what we'll do is we'll do probably the first item on the item 10 conceptual framework next phase, and then break early for lunch, I think. Okay. So we'll just wait for John to come to the table.
Yeah, morning. This is agenda item 10 in your papers, and it's the first substantive review of responses to ED 81, which was issued last year, and which we saw the very high level analysis of responses of the 27 responses in September. Okay, the standing items are taken as read. The aim at the moment is to approve in June. Okay. And that is the two chapters of the framework which are affected, which is chapter 3, qualitative characteristics, and chapter 5 on elements. Before I proceed, I just want to give a quick update so that we're clear on the approach to review of the specific matters for comment in ED 81. There were 8 specific matters for comment, and the ones we're looking at this meeting all relate to chapter 5 on elements. So we'll look at a rights-based approach to a resource, definition of a liability, guidance on transfer of resources, and the restructuring of the guidance on a liability. The other 4 SMCs, prudence, the addition of obscuring information through over numerous disclosures as a factor relevant to materiality, we'll look at that. And then 7 and 8, unit of account, and what we're now calling accounting principles for contracts that are equally unperformed. In ISB parlance, that's executory contract principles. So 4 of them to look at this meeting. Okay. And the first one is the definition of a liability. And the recommendation of board sponsor, the chair and staff, is that we should adopt the definition as it's proposed in ED 81. This is pages 6 to 12 in your suite of papers. Generally speaking, there was very strong support for this. I don't think there were any issues which were raised which we hadn't considered during the development of the proposal. The 2 main areas which were either contested or where respondents felt they needed a little bit more guidance, the phrase transfer resources, which we had adopted rather than an outflow of resources. Some commented that it seemed quite similar to standards level definitions under development, and also suggested that the term transfer of resources in the public sector has a particular connotation, specifically the movement of resources between different levels of government. Also, the transfer of resources to individuals and households under social benefits. The view expressed in the paper is that this issue is not insurmountable, and provided that there is clear guidance at the standards level on the definitions which are adopted in the revenue and non-exchange expenses project you've just been discussing, that is not a huge issue. The other issue is that some questioned the use of the plural events and suggested that it might obscure that a single event is enough to elevate an obligation to a present obligation and thereby create a liability. Again, the feeling is that the guidance which is supporting the change of definition is fairly clear, but we can probably look at that again and make a couple more further tweaks, but we don't think that there's anything substantively problematic with that definition.
Thanks, John, for that introduction. So open up for comments from members. Okay, so I'm sensing that we support the retention.
I should probably add at this juncture that the aim is that we will bring a revised and updated copy of chapters 3 and 5 certainly to the March meeting, and we are in discussion about the agenda for the February check-in. So where I have indicated in the agenda papers that I will make changes, I haven't yet made those changes, but those changes, mostly for the basis of conclusions, will be brought forward next year. The next agenda item, 10.2.2, is the guidance on the transfer of resources. Now, this is an area I've already noted that the term transfer of resources has been adopted rather than an outflow of resources, consistent with the ISB, trying to break that link, which some perceive, between the component of the definition and recognition. So the approach consistent with what we saw in the 2018 ISB revised framework. Now, again, there was fairly strong support for what we were proposing, and the overall classification is given in paragraph 6. There were comments made, suggestion, for example, that we should reopen the chapter on recognition. Now, I think that the comments made on that were quite valid, but recognition was not within scope of the limited scope update, and I don't think it would be appropriate for us to start tinkering with that now. Indeed, it would lead to all sorts of due process issues. There was a view that, again, we should differentiate between transfers as we use it in the conceptual framework and transfers in the context of IPSASB 23. We can do that, I think, with a paragraph in the basis for conclusions. There was some questioning of the use of the term resources rather than economic resources. Again, that's something which we've talked about previously, and the use of resources rather than the formulation the ISB use in their conceptual framework, I think is one we discussed on a number of occasions. Don't think it would be appropriate to look at that again now. Some questioning about offsetting. Again, we see that as an aspect of presentation rather than something which directly affects the definition of an element. There's also a view that we are expanding the number of instances where a liability would be recognized. Now, again, I acknowledge that point, but I think that it's clear in the drafting that we're not expecting that all liabilities will necessarily be presented. So again, this is trying to create a clearer distinction between whether or not an obligation meets the definition of a liability and that question of when you would actually present that liability on the face of the financial statements. So again, with some very minor drafting changes, mostly to the basis for conclusions, we recommend that we should retain the guidance on transfer of resources proposed in ED 81.
Thanks, John. Any comments from board members on that? Yeah, Camilla.
Thanks, Chair, and thanks, John. I agree with the staff recommendation. I only a bit concerned about the respondent 25. They highlighted some issues that we are not able to address in the conceptual framework because they are too specific. One of those is the transfer of resources when there is one entity that generates the obligation, but is another entity like the treasury single account, which actually transfer the resources to another party. or transactions that occur between entities of the same subsector. I agree that perhaps this is too detailed to address in the conceptual framework, but I was wondering where are we going to address that? So if we are planning to issue a staff Q&A, or if we can have a kind of tracking of those issues, like a to-do list that we might plan in the future, because I think those are relevant. They are asking for guidance. So, and it's public sector specific. So thanks.
Thanks, Camira. Just to highlight for members that here we're talking about a comment on page 16 of 95 of the agenda papers you've got. And it's a comment made by, as Camira says, respondent 25, and it's calling for additional guidance. I mean, I certainly agree that, you know, everybody who's been working on implementation, or a lot of those working on implementation, this has been quite a significant issue. So your suggestion of something like a staff Q&A possibly needs to be looked at further. However, I do think, given the huge challenges the board's got, you know, be inappropriate for me to comment any further on that. But certainly just to note that we have addressed certain issues in staff Q&As, and that form of communication does seem to have been quite successful.
Thanks, John. Ross, perhaps I mean, you know, some of this picks up on the discussion in terms of, you know, how do we move into more of a sort of, you know, review of the standards and post-implementation reviews and that kind of thing, Ross?
Yeah, I was going to say, it feels like an issue we should put on the long list of issues of potential projects. We're about to go out and ask our constituents what the future work program should look like. And I think we should be careful not to jump ahead of that process. We log the issue and put it on the list, and we can have a think about if this is an item that would merit a staff Q&A like the other items or not. But we shouldn't be overreactive and provide guidance for everything everybody tells us to. So I think, because I haven't heard this through past consultations when we were in 2019 to 2023 or the mid-period as a priority, but maybe we haven't been asking the right question either. Yeah.
Okay. So then back to the overall recommendation. I'm not hearing any disagreement with the recommendation, so I think we're fine with that.
The next issue, agenda item 10.2.3, starting on page. Next issue, agenda item 10.2.3, starting on page 18, is the revised structure of the guidance on liabilities. Now, this was an attempt to try and firstly provide a little bit more detail on the different components of a liability. And it was also trying to align the guidance with the three components of the liability. That's to say, the existence of an obligation, the requirement for the transfer of resources from the entity, and importantly, the present obligation arising from a past event. And it looked to address what some thought was a deficit of information about the components of the liability definition in the 2014 conceptual framework. Now, the response to what was proposed was generally, I think, very positive. That's given in paragraph 8, the raw numbers. There are a number of changes that people may suggest. For example, if we look at respondent 06, that respondent suggesting that we could improve the guidance by adopting a bullet point format. And in a particular paragraph, 5.17b, and I think that's a very good proposal. Some suggestion that we're overemphasizing this issue of the public communication of the intention to behave in a particular way. Again, I felt that it's important that even if an entity has been trumpeting from the rooftops what it's going to do, if all it is doing is creating an obligation to itself, then that is not a liability. So I felt that it's worth making that point. It's a simple point, but it's quite an important point. Staff, one of the sentences has been deleted, and the suggestion is that we should explain why we've done that. Okay. So again, we're talking about relatively limited stuff. The respondent who disagreed, respondent 04, and that's quite an interesting point they've raised. You can read it under paragraph 10 that they're saying, well, legislators in some countries have limited the performance of related obligations by a public entity with the status of an operator of essential services to specific essential services. In other words, they very much narrowed the circumstances where there's an obligation with a past event, which is, leading to the transfer of resources. And I felt that although that's an interesting example, it's a jurisdiction-specific issue, and we don't really want to start getting involved in, that kind of discussion, where really what we're saying is, well, you've got to do this. You may have to do a range of other things, but practically you don't have a legal obligation to do so. Really, it's the professional judgment of the preparer to determine whether or not they have a legal obligation, and if not, whether there is a non-legally binding obligation. And just to further note that we're aware that in some jurisdictions there are a lot of reservations about the concept of a non-legally binding obligation. What we renamed a constructive obligation from ISB literature, but we haven't re-deliberated that particular issue. It was an issue which caused, precipitated a lot of discussion in the 2014 development, and it's not something we've discussed at either board level, and we certainly haven't proposed any changes to the approach in the 2014 framework. But just to acknowledge those jurisdictions who do have reservations about the notion of a non-legally binding obligation. So the proposal is, as on the basic slide, that we should retain this revised structure with some fairly minor editorial amendments, which we'll bring to you in the first quarter of next year.
Thanks, John. So any comments on that proposal that we retain? Okay, that's good.
The last item in this for today is the rights-based approach to resources. This is specific matter for comment 3. And it's the area, I think, where there was the most reservations about what we were proposing. We were proposing to be much clearer that we are adopting the same rights-based approach to resources in the context of a definition of an asset that the ISB has in its 2018 framework. Now, I think you can exaggerate the extent of this change. I don't think it's going to lead to a proliferation of new assets, but it is an issue which, as we've seen in other projects, does give rise to quite strong views. There is a view in the public sector that for accountability reasons, a physical asset should be presented as a single asset. Now, we've looked at this, I think, at the standards level. My view, and I think it's fair to say the view of the board sponsor, is that there haven't been any new issues which have been brought up, which would lead us to contest the approach we're taking. We have also said that in many instances, a physical asset will be a single unit of account. Nonetheless, if you have different rights over the same resource, then it's important that the accounting reflects that circumstance. So whilst I think, again, there are some tweaks we can make to the drafting, and that those have been reflected in the right-hand column of the analysis, of the tabular analysis. And that's both those who agreed with the proposal and those who disagreed. I don't think that we should be rethinking completely this approach. I think the approach is not, there's no suggestion that it's fundamentally flawed. One other issue I would like to raise, that one of the paragraphs in this guidance is about a resource which is something like an employee services, or importantly within a public sector context, where a public sector entity receives in-kind services, either gratis or at a highly subsidized rate. Some questioned that paragraph because they felt that it didn't really relate to the rights-based approach to resources. Personally, I certainly acknowledge that. I struggled with this initially, but I do think that it's quite an important issue. And it's certainly an issue that arose in the deliberations on revenue, that you, using the word I use, I know David doesn't like it, you momentarily have an asset before you consume the service. We've said you very briefly have an asset. So I do advocate that we retain that particular paragraph. And that's paragraph 5. Gosh, I know. If you bear with me, I'll point you to that. It's 5.7c in agenda item 10.3.1. I'll just read that out to you. Some services, for example, employee services and services in kind, are received and immediately consumed. An entity's capability to obtain the service potential or economic benefits produced by such services exists very briefly until the entity consumes the goods and services. So, and that pretty much mirrors something in the ISB's framework. However, we have added the example of services in kind. Okay.
Mira.
Thanks.
Thanks, John. About that paragraph, I agree with retaining it, but the part of employee services, while reading this paper and the comments from the respondents and what we are doing in the change in the definition, so from resources, change from being an item to be a right, that actually opens the door in the future possibility that someone or one standard setter or something can come out with the idea that also the human resources can meet the definition of an asset that can be recognized as an asset because they meet all the criteria, control, past events. So from the theoretical point of view, we will not be able to refute or prohibit that as it is now. And I consider now no action required but in the conceptual framework, but this is something that could come out in the future, maybe 10 years, I don't know, but we are opening that possibility. Thanks.
I mean, I'm wondering whether we could say services provided by employees. Would that help indicate that we're focusing on the service rather than the employee?
Well, I think that's the main question is, do we go in this direction? I think there's a specific issue here that maybe needs a bit further consideration. You know, I mean, I think one of the challenges here with the framework is that we can't foresee all the ways in which it's going to be used in the future, and that, you know, that's just part of standard setting. The question is, do we think this is the right way to go in terms of the principle? And I think so. I think there's a specific there, which is, do we unintentionally open up something through the way in which something is drafted, as opposed to what the principle is? So I think if we can take, if the board's content to move in this direction, then I think we need to take a look at that in moving into the drafting. Can I take Lindy? Are you? Yeah.
Perhaps the revenue team can have a look at it, because I think we do talk about services received in kind in the revenue standards. So maybe we just have to check what we're saying. I think it's going to be very difficult if you get someone on secondment actually to have an asset, but we just need to double check what we're saying.
Yeah, I mean, I agree. I think it is. And actually, that's one of the reasons why we were trying to make sure we'd had the discussion on these parts of the update now, so that, there wasn't anything that was then going to cause us a problem in terms of revenue and transfer expenses. So I think you're right. If we can ask staff to make that cross-check internally.
Yeah. Noted.
Okay. So thanks for that.
I think a lot of the other comments really relate to the perceived complexity of the rights-based approach. But personally, I don't think any of the respondents, although they've provided some very well-worded and well-argued responses, I don't think that anything new has surfaced through the responses. Okay.
Lindy.
Yeah, I think if we didn't go the rights-based approach, it would look odd, because a lot of our standards have gone that way. So leases and financial instruments, I think it would be appropriate to retain it and not go back.
Thanks. Is anybody else concerned about making change? I mean, obviously, we've got to look at that point that Camira has raised. Yeah, Camira.
Yes, I also I agree with the staff recommendation that we should go forward with the right approach, but I see that some respondents are asking for more guidance, and I do recognize that in the framework is too high level. So the question is, where are we going to solve that in the lease standard, in the property, plant and equipment standard, in a staff Q&A? Because there are questions about, okay, the complexity of applying this approach, the possible duplication between the underlying asset and the right of use of that asset. So there is need for guidance. For sure, probably it's not the conceptual framework the right place to provide that. The question is, where will we provide that guidance? Thanks.
I mean, I think this comes into the next phase. And we probably, what we need is almost a sort of long list of areas where people have actually asked for further guidance, so that we can actually start to look at it and say, this is just one person that's asking for this, or this is actually a group of people, and clearly there is a need. Either there's a gap in authoritative literature, or maybe we require a specific piece of implementation guidance or whatever, and how does that also fit with what we might do in terms of interpretation so it moves us into that area. And I think it's a good problem to have, because it shows people are using our standards and they want guidance. So I think that's the action for staff, that we need to have some way of actually collecting those sorts of comments and requests as part of our process.
Yeah, I mean, one example of this is the view, well, we've said a physical asset will often be a single unit of account. Well, give us more guidance as to when that is not the case. And I don't think it's being flipped to say, well, I don't think it's the purpose of the conceptual framework to do that. And indeed, quite a lot of our standards and standards under development are looking at these issues in particular circumstances.
Okay, so I think we're content that we retain the rights-based approach. And so as you indicated, John, we will see the drafting back, implementing that, and also addressing anything that we need in terms of specifics, addressing constituents' points. Ross. We've just agreed that we're retaining the rights-based approach. So no, Ross has been looking at what we're doing the rest of today.
I just want to say I support that decision.
You want to write
After lunch?
Yeah.
Yeah. So we will be going into the session on presentation of financial statements after lunch. We got the extra time today, so we're gonna discuss that item after lunch, just to let everyone know. And then as a reminder, we'll then have a short session following that to wish our departing members well.
Yeah, and that takes a bit of pressure off the agenda tomorrow is the idea. So apologies for doing that flip, but you know, it kind of underlines that agenda planning is always an art rather than a science. If we take an hour for lunch, we're ahead of timetable, but if we take an hour for lunch, so we're back here at 1:10.
Yeah. Thanks, everybody. Appreciate it.
Ross has said, can you have an extra 5 minutes? So 1:15 then. Okay, and thanks, John, for that session. Just give us 2 minutes to tee up the next session. Right, okay. Thanks for coming back promptly. So in terms of the session this afternoon, just to be clear what we're doing. So we've brought forward the session on presentation of financial statements, and that's going to be led by Tashreeq. And then we'll have the member presentations. The public meeting will actually finish before we go into the presentations to departing members. And then if with the indulgence of board members, I'd just like to have a short in-camera session so that we can just check where we've got to in terms of members' views on the press release that we're going to put out in terms of sustainability reporting. So just want to do that very briefly. We won't have a long discussion, but it's really just to check where we are on that, if that's okay. So without further ado, then I think if we're ready to go into presentation of financial statements, turn over to Tashreeq to introduce the item.
Thanks, Chair. Good afternoon, everyone. So the aim of the session is very much to give the board as much time as possible to actually discuss the way forward on this project. So essentially this quarter, staff spent quite a bit of time looking at the comments raised by attendees at the forum. And so that's presented in agenda item 11.2.1, which I'll just go through quickly. And then the second part of it was really to look at some of the approaches taken by some of the standard setting boards around the world in terms of this area. And we've set out what our initial research, we've set that out in agenda item 11.2.2. Can we move to the next slide, please? Thanks. So essentially, when we spent a bit of time going through some of the issues raised by attendees, there were essentially four kind of overarching themes. So the first one was there were quite a lot of comments actually calling for the IPSASB to really look at coming up with presentation and disclosure requirements that really focuses on what is important to the users. So there was a call to really look at the standard and make sure that it's as simple as possible for users to understand. So that was kind of the one big theme that we saw coming through. The second one was that there was a call to kind of look at the statements and really make sure that they focus on the accountability to stakeholders. So it's really to highlight how the entity used its resources during the year on its programs and activities that achieve the entity's service delivery objectives. So that was the second overarching theme that came through. The third one was from some attendees in that there was a call to kind of look at the presentation and disclosure requirements of incomes and expenses that are recognized directly in net assets or equity, and therefore it's not coming through on the statement of surplus or deficit. So that was there were a few comments around that. And then lastly, there was a call to actually find a way to facilitate the reconciliation of the financial performance of the entity to the entity's budget. So that was just the kind of four overarching themes which we saw coming through from the attendees at the forum. Next slide, please. Thanks. So that was essentially what's coming through in agenda item 11.2.1. So that was the first paper. And then the second paper that we brought to the board was essentially our research on what we found happening in this area by various accounting standards boards around the world. And there were kind of three that we were looking at. So the first one was the IS1 proposals by the ISB. So just a bit of background on this. A few years ago, the ISB undertook the presentation of financial statements project. It was paused for a bit during COVID, and then it was actually re-looked at again now recently. So we looked at what the ISB is actually doing in the section, and that's set out in the paper. I won't go through that in a lot of detail. The second one was really to look at what GFS requires in terms of their reporting requirements. So we've kind of looked at that and set that out in the paper as well. And the third one was quite interesting. There was, there's a public sector specific approach developed by IPSASB in Canada. And they've kind of really looked at their various statements and really focused on kind of what they thought was important to users, and they've remodeled their standard based on that. So these are just some of the approaches that we looked at as a starting point based on our initial research. Next slide, please. Thanks. So essentially, I think what we're trying to get from the board as staff in this session is kind of really around question one. So what we're really trying to understand and what we would appreciate is the board's views on the direction of this project. So how do we take this project forward, given some of the issues that we heard at the forum? So I'll pause there. Thanks, Chair. I'll hand over to you for any comments from the board.
Thanks, Tashri. I wonder whether we might just walk back to that slide with the 4 squares on it. So I think that's quite a good sort of just prompts in terms of, so if you go back just the previous one in terms of that one, I quite like that as a sort of, as a summary, and maybe we might just sort of pick up member comments or thoughts on, those particular areas, recognising this is very much a sort of first go around the piece, if you like. I don't know whether, there were any thoughts on sort of what's said there in terms of focus on users' needs at all. That prompts thoughts that we should put forward. David.
Thanks, Ian. In some ways, I think this is probably the most fundamental question, because who are the users of the financial statements? And I know in some of the research that the board's had to undertake in some of the other projects, actually finding a user is very difficult, if not impossible. So I think we need to think about who the financial statements are written for. I think if you looked at some of the sort of literature, not IPSASB literature, but general literature, the financial statements would normally be written in the expectation that the reader has got at least some financial awareness or whatever the words are, so that you don't have to make them sort of Janet and John language, for those of you who remember Janet and John. It doesn't have to be really, really simple. I think also, certainly in the UK, for example, when we were doing accrual accounting for central government, Parliament was actually selected as the user, as the proxy for anybody and everybody else. Other jurisdictions might not do the same. So I think before anything further is done in relation to the other boxes, and I think those boxes are very good, I think we need to identify the level at which we are going to be presenting the information, and so therefore who is that user.
Thanks, David. Lindy.
Thank you. I agree. We had Kathy and Mark. So I like the boxes, and I do agree that focusing on users' needs will be a challenge, and we might need to agree on, maybe we would focus on resource providers. I also like the question, probably more what I wanted to say is that I think it would be a good approach to say we're looking at this as a project that could have multiple products and not one outcome in mind. And depending on how we unpack these, it could cut across potentially more than one standard. It could be guidance, it could be a standard, etc. And I think that would be quite useful because of the magnitude of this project, that I think it would be useful to be open to the fact that it might not be one standard. We might not address, amend one standard. It could be multiple responses to the issue.
Thanks, Linda. Yeah, I mean, it's interesting. I mean, there's seeing Andreas sitting there, that there's a piece of work that's been done for the World Bank recently, which is actually about making financial statements readable and accessible. And I think that's one of the things that actually I find that a really interesting piece of work, because I think, when you go to actually, how do you make financial statements accessible to different audiences, then you kind of come back to, okay, well, who would be the primary user of a classic set of financial statements as opposed to, the various different other readers and so on. And I think that's something that, to your point, Lindy, of let's use this opportunity to take a step back and think about those things. Actually, that's probably, I would say, that report is, and I don't think it's been published yet, Andreas, has it, or is it? Okay. So I think it would be helpful for the board to see that for the next discussion, because I think that would help us. Okay. I think it was Scott and then Chris.
Thanks, Ian. I agree the focus should be on user, but there's an interplay between the green box up here and the blue box, and that is the difference between. Yeah, David, it's hard to find a user, but we can come up with a long list of stakeholders. And I think through this process, the advantage of that Financial Accounting Standards Board and IPSASB is they've identified one primary user, which is the investor. Okay, so it simplifies their reporting. So the more people we put in those boxes up, the more complicated the reporting gets. So I would encourage us through this to kind of think about who are the primary user. We can always think about other users and stakeholders, but I think if we help narrow this, I think it'll help get to the goal of streamlining the reporting.
Yeah, I think that's a very useful thing to think about, because I mean, I remember this when we were writing the conceptual framework, but actually, we kind of ended up with whole rafts of people who might potentially, be users. Chris.
Thank you, Chair. I'm very excited to see this. It's very, very important for us as a board. I think it's going to sort of redefine the work of this board. Let us identify who are the users of financial statement in the public sector, That is going to tell us what kind of standards this board should be focusing on. It defines this project or this focus, this blue box, defines what are the objectives of financial reporting in the public sector. What are the purposes of financial reporting in the public sector? Whether we like it, we believe it or not, the objectives of financial reporting in the public sector are different, fundamentally different from that of the private sector. So if this board will be able to identify this and articulate who these users are and for what reason they are using
financial statement of the public sector, it will help the board to focus more on developing standards that are peculiar to the public sector. I think for me, this is a very important project that we should really launch into.
Thanks, Chris. Renee and then Lynn.
Yes, thank you. So building on what has just been said, I'm reflecting on the blue and the green boxes, focus on users, focus on accountability to stakeholders. I find that they overlap. I think one of the key role of financial reporting is to demonstrate accountability back to our stakeholders, the users of our reports. So if we are going forward with this model, somehow in consultation, I would consider grouping these two into one cohesive idea.
Thanks, Renee. Lynn.
Thanks. So when we look at when we look at the feedback we had from the forum, the focus on users and the focus on accountability to stakeholders was raised in the context of the presentation of the financial statements. And I think we need to bear that in mind. I also think we get very much into an academic discussion very quickly on users. We've already put in the conceptual framework who we think the primary users are. So if we're going to revisit who are the users, who are the primary users, I would encourage us to do that in the context of what we've already said in the conceptual framework. A lot of thinking went into the conceptual framework at the time. Maybe part of it is to refine that. But I wouldn't want us to embark on a very long journey that will only potentially get us back to what we've already got in the conceptual framework. And I guess then then if we are then more crisp or we identify better who the primary users are, then I think this project should be scoped in a way that then considers that in the context of presentation of the financial statements. It's not in the context of reopening up the entirety of what we should recognize, what we should measure, how we should measure. It needs to be then brought back into the scope of the presentation of financial statements. And then my final observation, I guess, on users is, yes, in the UK, we did say we are very clear for central government that Parliament is the primary user, but we don't just write standards that are used by central government entities. We need to end up with something that makes sense for the public sector.
Thanks, Lynn. So I was listening to what you were saying and missed the flags. So maybe I'll go for Mary and then Adrian and then Claudia, if that's okay.
Thank you. From the perspective of the public financial management, the so important user is the politicians and the administrative officials and auditors. And so budget preparation and budget execution and performance evaluation is so important. And so our focus should be on the politicians and administrative officials. And then most important stakeholder is our citizens, our taxpayers. And in the Japanese case, it is a problem. It means the public account committee in the parliament. And so its function is so great, have so great significance. And their function does not, if their function does not work, it is not discussed the material matters in the parliament. And so the important thing is how how to present the financial statements, including the non-financial informations and also the performance evaluation informations. And so it's so important. And finally, the accountability should be accomplished. And so it is the financial statements and supplementary information presented should be understandable. So thank you.
Thanks, Maureen. Yes, I think that encourages us to really think through that whole, what's that system, and therefore at what point is the accountability located. So I've got over Adrian, Claudia, and then Nima. And I'm looking to see if I've missed Patricia or not. But I haven't at this point.
Well, just a short comment. I also do think that focusing on users' need and stakeholders, accountability stakeholders, would in the end be the same. Although the presentation, the problem we have, and obviously much is said in the conceptual framework about primary user. What is a primary user? And this is the important definition, primary users, because not all citizens, and this is something that I'm worried about when we're talking ordinary citizens, not every ordinary citizen has substantially the capacity to be a user of the financial statements of a public entity. We're not saying that the standards on presentation of financial statements should be a sort of a my financial performance for dummies. It's not that. It's not that we want. However, there are different sorts of users in the public sector. You have capital providers and service beneficiaries. I would put it this way. I mean, very, very simply. Those who provide, the capitals for the entity to be able to operate and deliver, and those who benefit of the service provided. And this was something that I thought I heard at the time we discussed in Cascais from the Canadian presentation. There was that alternative. Okay, either you present your financial statement in order to inform the capital providers, and this is the way, one way, and it has one shape, or you provide the information for those who are not maybe the ordinary citizens, but those who will be representing the ordinary citizens, maybe the politicians in parliament who want different information. So maybe this would be the breakdown of the intentions of the presentation of financial statement, which could possibly lead the thinking and work on that.
Thanks, Adrian. Claudia, and then Nima, and then Lucy.
Thank you. I wouldn't add to all what was already said, because I totally agree that focus on user needs and stakeholders are more or less in the same box, and following the discussion or the invention of Adrian, yeah, probably we wouldn't find a perfect solution that helps all of them. But I want to ask if you would have in the scope also the topic of materiality, as we are discussing also, as Mary said, of non-financial information, so we're only discussing of financial information. So that means if you have also this disclosure initiative of IFRS, something in between in our project. So we should just be clear what we have in the scope of our project and what it's not. Because focus on user needs could be open everything.
Thanks, Katie. Ross, did you want to come in before I go to Nima?
Not on that point, actually, but I will say on the scope, we don't know what's in scope yet. That's part of the research and scoping, so we're thinking about it. But I think there's an important point that started with Lynn's intervention. I just want to log that we will be starting with the conceptual framework in this. We won't be having a debate over users of our reports. That's in the framework. The board had this debate back in the early 2010s, finalized it in the framework. There's great work in there. We're starting from that point. We're not starting from scratch on that. This is about bringing the thinking of the framework into it, not re-having that debate again. So just to be clear on that, we will not have a section in the project brief about defining public sector users. We'll refer to the guidance that's in the framework and bring that in.
Thanks, Ross. So Nima, then Lucy, then Todd.
Thank you very much, Chair. I think I'll start from Ross, that the users are known. So I think it's a very good area when we're thinking of the presentation. Sometimes I feel like, say, if I take the example of the Ministry of Education, the questions will be, yes, we've built 200 schools, but how did my constituent benefit from that, from the members of parliament? So I always try to link that to the segment reporting and have the segment reporting per constituent. So I don't know if this one will be able to go that down and link, as we are linking with 24, also to be able to link with segments. And for example, like in our case where we've said that the NGOs should use IPSAS, I find also donors asking whether they can get information of different donors in IPSAS financial statements. And I go back to the same thing, saying that we will put that in segment reporting, and as a result, we do that. So, but because it is optional sort of, people will not do that. But if it's linked like how we've done in 24, then segment will be able to bring most of the information to make this understandable.
Thanks, Nima. And I think some of that goes to comments on scope, really, doesn't it? Because you're right. And I mean, it's on the slide, you know, the reconciliation with budgets. So that picks up IPSAS 24, but you also, then you've got GFS. So IPSAS 22, do you also go into segment reporting as well? So there's a number of different questions that we're going to have to think through, you know, and as Ross says, starting from the conceptual framework, but I think then, you know, we do have to think, well, okay, how wide are we prepared to go, bearing in mind the trade-offs in focus and so on, and also some of the practicalities in terms of that we heard actually in the discussion with the FRAB, with the CAG about you know, different budget boundaries, different bases for budgets, and so on. So, in a sense, you may end up with something which is permissive and, you know, enables rather than one, you know, one size fits all. So I think we're going to have to think about those quite carefully. And of course, some of those are our older standards. So there's then questions about, you know, updates and things like that. So we're going to have to think through those things very carefully. So I've got Lucy, then Todd, and then Liang and Ajith.
Thank you, Chair. I agree with Lynn and Ross that we want to start from zero on this because conceptual framework has already provided. There are already topics in our conceptual framework about the users of the GPFRs. All the users have only one common objective, and that is for decision. They will use the information in the financial statements for decision making. Now, I think we have just to identify who these users are, because there are varied users and what their objectives are, so that, or what information in the financial statements they are interested in, so that we would be able to determine whether the financial statements that we would be prescribing would be catering to the information that these users need. For instance, if the user would be management, of course, they are interested in the they will use this for strategic decisions or operating decisions, suppliers. Maybe they want to use the financial statements if they would be able to continue doing business with a particular entity. And in other words, let us revisit the financial statements that we are prescribing and whether they would provide the information that each of these primary users would be needing to support their objectives or to support their interests in the financial statements. Thank you.
Thanks, Susri. Todd, then Liang and Ajit.
Thanks, Ian. A good discussion on this point, and I think focusing on user needs is very important. And I'm pleased that we are linking that back to the conceptual framework, which probably goes to Adrienne's point. We've got in the framework that it's about the resource providers and the service recipients, and I can see that is probably quite a diverse user group when you think about what we've got in our framework. And when I looked at what's in paragraph 8 of the paper, what I sort of focused in on was this need for flexibility. Because you've got that diverse user group, we're not going to try and come up with here's the template that you fill in whatever we're doing here. We have to be very open-minded. We probably want to provide the right framework, but flexibility is going to be so critical in terms of what comes out if we're going to play to that user needs point, I think.
Thanks, Todd. So Liang, then Ajit.
Thanks, Chair. I strongly agree that the project should focus on users' needs, and in particular, I strongly agree the staff analysis in the paper that many users are not experts in financial reporting, and the presentation and disclosure requirements should not introduce unnecessary complexity and should be straightforward enough for an ordinary citizen to understand. Actually, currently, we always hear people and stakeholders say that the accounting standards are too difficult, and it is not easy for them to understand the whole set of accounting standard. I think the presentation of financial statement, actually, it is the face of the accounting standard. Even the standard themselves are very difficult to understand. If the financial statement could be a bit straightforward and easy to understand, maybe it will be quite welcome by the stakeholders. Another point I would like to touch is the last point, facilitated reconciliation with budgets. Actually, in China, we also have budget information and the financial information. So if this project can facilitate reconcile with budget, I think it will be much welcomed by the stakeholders. Thank you.
Thanks, Liang. Ajit.
Thanks. In the statements, in the standards that we have adopted from IASB, the IFRSs, there are a considerable amount of surpluses and gains and losses that are coming through the other comprehensive income. And those items are now at the moment going directly into net assets. And this amount of gains and losses are not shown in the surplus or deficit in our income statement. But in the standards that IPSASB has drafted, that doesn't happen because the IPSASB standards are based on our conceptual framework. Our conceptual framework says that any net assets gain or loss is recognized as income or expenses. So there is a difference between the way the IPSASB, the ISB standards been drafted and adopted goes into income and expenses, and when we draft our own standards go into the income and expenses. I think this difference arises because probably due to the absence of other comprehensive income statement and also our conceptual framework, which is different from IPSASB in that respect. So I think the disclosure of other comprehensive income is an important part in correcting that problem. So I think the presentation of financial statements, that project should take into account this aspect as well. Thank you.
Thanks, Ajith. Go to Mike next, and then Patricia.
So thank you, Chair. Just two comments. I think the first one, that was something you already touched. I think it's even most prominent for the green box. I think when it comes to, let's say, disclosed expenses for functions on the statement of surplus, I think we really should have in mind the linkages to segment reporting, even to a future project for segment reporting. Maybe it's worth to do the revision of IPSAS 18 first, and then look what else should we achieve in this space. And the second comment, this is a general one. I think the IFS alignment of the IPSAS has its really great benefits and merits as well. So as the IFRS, they are well-known standards and users of IFRS, maybe they are easily able to read IPSAS statements and have a certain expectation. So I would be really careful when it comes to the deviation from the IFRS. Thank you.
Thanks, Mike. Patricia.
Thank you. I agree with the focus on the user's need. I think the conceptual framework defines the users, but my concern is in relation to what does the user needs, because we know the knowledge about the users it's not consolidating, and normally some studies indicate the use of budget information, not financial information. Considering the process in the adoption and implementation, I think we need more experience to, in fact, know what the users need. And in addition, I think in some areas, the IPSASB can be flexible, but I think in other areas not. For example, when I need additional information to understand the number in the financial statement, I think it's not possible to be flexible. It needs to be mandatory. It's impossible to understand some numbers. For example, an asset is measured based on fair value without knows the assumptions, the choices that the entity made for having the measurement. Then I think, yeah, I understand the concern, but I think we have to be careful in the decision about to make the disclosure flexible. Thank you.
Thanks, Patricia. Ross.
Yeah, I think you're right, Patricia. You're probably, highlighting the key challenges in this project. And to be honest, where we're going to struggle, the real problems. Just to reinforce again, though, we do have a presentation chapter in the framework that tells us to think about how to select information, where it should go in the financial statements, and how to tell the story. So it doesn't give us all the answers, but it does give us the way to think about it when we tackle these problems. And again, we will be following the presentation chapter in the framework in thinking through the issues. So I just wanted to make sure to make that clear that we won't be having a debate on what information is important or not. We'll be looking at what the framework tells us and applying that in our analysis to bring forward proposals to the board.
Thank you. So, I mean, I think that's actually been a very rich opening discussion. I think what I hear from that is very much that we need to root this in the analysis and the conceptual framework in terms of users and back to the funders and service recipients. It does seem to me, though, at this early stage, it may well be useful though to take advantage of whatever there is in terms of relevant academic research or other studies. I think that's useful within that if you like, within that starting point. Let's have a look at what's actually out there before we sort of start to dive down into, you know, more detail. Certainly, I think we need to then have a think about that and reflect on that in the different situations that you have, in terms of actually the drivers would be different if you actually have largely consistent budget and accounting practices and a coterminous boundary for that compared to a different situation. And similarly as well, you know, are you trying to actually reconcile as far as possible with GFS or not? So there's probably a number of different, if you like, scenarios that we maybe need to think these questions through in. Those probably then lead into some of the you know, the kind of questions in terms of, you know, the one that Ajit raised in terms of where do you go on other comprehensive income type presentations and so on. So I think, you know, if we can sort of try and as much as possible actually kind of give ourselves a sort of at least a kind of sequencing through of, you know, those sorts of issues. Clearly, we're going to have to think about, in the light of that analysis, what is the, you know, to what extent does our existing literature require revision? Or actually, you know, can we keep this as narrow as possible, at least in terms of not reopening, say, you know, IPSAS 24, IPSAS 22, segment reporting, because we know how challenging it is when you start to reopen a lot of different standards simultaneously. So maybe we just need to think about the maximum. If it ain't broke, don't fix it. Certainly, you know, there is, ISB is thinking quite a lot at the moment about presentation and links between the actual performance statement, cash flow statement, balance sheets. What extent is that useful to us? To what extent is it just the performance statement that we want within scope? Or are we looking at those others at the moment? Or are we going to deal with those as different, you know, potentially different projects? So I think there's quite a lot of different things that we actually need to think through. But the more that we actually have a kind of logical way of thinking that through, I think that will help before we dive down into, well, I like this line in the financial statement and I want, you know, an objective rather than some, you know, all of those kinds of questions that we will inevitably face. And I think as well, if we're clear, because this will inevitably be probably a consultation paper up front because of all those various different debates and discussions. So there's probably some, okay, how do we think about this? How do we, if you like, pull the key issues? If we've thought it through in those ways, that will then help us in terms of how we might go through the consultation paper. Thomas.
Yeah, just a short note that in the IPSASB project, there was also a paper prepared called Presentation of Financial Statements, focusing on the performance statement and the relationship to the IPSASB consultation conceptual framework that could inform your thinking.
Absolutely, yeah. I think, you know, and as we know, there are other national there's other national standard setters that have relevant work. And I think certainly actually having a look at, you know, I know IPSASB have done a lot of detailed work, and I think it's worthwhile us just drawing on that as it is with other national standard setters. So just then thinking about the actual papers at this stage, Tashreeq, that's been quite a wide-ranging discussion amongst the board. Are there other parts of the paper that you would like to direct us to at this stage?
Thanks, Ian. I think, so the discussion was really centered around some of the issues. I think maybe it would help staff just going forward if we just get some views on the options that were presented in agenda item 11.2.2. So that was the slide after the boxes. So just the IS1 proposals, GFS, etc. Maybe that would just help staff going forward. Thanks.
Okay. So move us forward then in terms of the slides. So just open up at this stage for any particular observations that board members had on the analysis on those different approaches and the research on those. I mean, I think, you know, we've picked up quite a lot of that already. Certainly, though, I think, you know, for example, we would want to have a look at, obviously, IPSASB developing some slightly different reporting coming out of those discussions and those conclusions. And I think we should have a look at that thinking before we move forward. You know, and we may or may not agree with it, but I think it's still useful to access that given the amount of work that's been done. Lindy.
Thank you. I guess it touches on this one in the previous slide as well. So there is a move for a lot of, specifically, I think it's probably more in the private sector, maybe some governments where information is available digitally. And I don't know to what extent the project needs to consider how the users consume the information, or if it's just, you know, if we go on the premise that it will still be published financial statements and this is what it is. But I do think it's probably something that should be touched on there and see what impact that might have on the project, if not now, maybe sometime in the future.
Yeah, I think it's a good point. I mean, because we don't have an IPSASB taxonomy or anything like that. And there are complexities in the public sector, I think, because partly of the different ways in which people use the standards. So, you know, whereas IFRS is very much going for direct adoption because of the capital markets perspective, whereas we don't necessarily have that. And then there's also the kind of questions about budget boundary and budget policies and so on. So I think that makes it a lot more complex, as well as GFS versus ESA, all of those kinds of things. So there's a lot more complexity. But on the other hand, I think it's probably we've not really actually documented our thinking on that before, and it would be helpful to at least go into that, even if the answer is actually it's too complex, but at least from a stakeholder point of view to be seen to have actually addressed that. Scott, are you on that? And then I'll take Yang.
Yeah, I was thinking the same thing when you said that. When you start thinking about the user, you're going to have to think about how they consume it. And today people consume information using technology. So it does come into play. I will refer you to IPSASB. They've gone down this route several times. So if you want to, you may want to check on that. So.
Thanks, Scott. Yeah, I think, you know, the more we see what other people have done and the challenges that they've faced and maybe the dead ends they've ended up in as well. Yeah, that's really helpful. So Liang.
Thanks, Chair. I also want to have some to talk something about the ISB project. Actually, in China, when stakeholder we have a discussion about the ISB proposal. Actually, there are quite a lot of disagreement. One point is that they make the financial statement too complex. As you know, one of the major proposal by ISB is to classify the item in the income statement into three categories: operating, financial, and investing. Actually, many comments, the stakeholder in China, they have raised quite a lot comments on this, because actually currently entity, when they do business, they may not think too much about whether the activity is operating or financial or investing. Actually, they may put everything together, or say they try their best to earn money in private sector. So actually, it is very difficult for them to distinguish operating, financial, and investing activity. Another comment I heard from stakeholder in China is maybe ISB, they always they in their proposal they make the thing too complex. One example is about the foreign exchange difference, and their current proposal is just divide the whole item into operating, financial, and investing. Actually, it is very straightforward for foreign exchange, but the current ISB proposal is just ask people to divide them into three categories. Actually, stakeholder in China, they thought it is meaningless, or actually the cost to do this is outweighed the benefits. So I just want to share these comments, and also, as I just said, I strong agree that our project should focus on the information needs of our users, of the users of financial statement, in particular for public sector. And I understand that IFRS alignment is one of our strategy, but I think in the presentation of financial statement project, maybe we can think it over and to understand the stakeholders, their needs, and what are the important information for them, and to explore further to whether we should to have the alignment of the IFRS. Thank you.
Thanks, Liang. Tashreeq, did you want to come in before I go to Abdullah?
Yep, thanks, Chair. Just one comment on what Liang mentioned. So just a bit of background to the three categories which the ISP is coming up with, and what's in the paper. Essentially, this is actually coming from the updates or the new IFRS 17 insurance standard. So the thinking was they really wanted to come up with a way to show how an insurer adds value. So they came up with this kind of threefold category, which is it stems from the cash flow statement in IS1, but they tried to bring that through in IFRS 17, and then they've actually also brought that through into the IS1 proposals. So that's where this three subtotal categorization is actually just coming from. It's just a bit of background on that point. Thanks, Chair.
Thanks, Tashreeq. Abdullah.
Thank you, Chair. Two thoughts in this part and the previous part. I like the facilitation with the reconciliation of budget, and I like the facilitation with the GFS, whether we like it or not, but jurisdictions, they put more weight on the budget preparations, and the GFS reports more than the execution of the budget, which is the financial statement. If we can align and facilitate with that, that would be even better for promoting the adoption of for IPSAS standards. The other thought would be around, we have to take into mind that there are some specific public sector elements, which is uncontrollable items that we might argue what is the presentation of it in the financial statement, but just we have to put that in mind. These are the thoughts that I want to share.
Thanks, Abdullah. So I think probably we've got about as much as we're going to get for today, but I think it shows the challenging nature of this as a project, but I think it also shows the reasons why we need to do it. I think it's fundamental, as a number of board members have said, and it probably does come back to that, trying to have those high-level discussions to begin with and to draw on the research before we actually dive down into what does that really mean. So I think, again, that's why we're doing this scoping and research phase. I think that really that will help us if we do that well before we finally land on a project brief. And we need to think about how this will work going forwards. Clearly, it is likely we're going to need a consultation paper. Maybe some elements of the way we approach measurement might be helpful, where we have the sort of illustrative exposure draft, and certainly people responded well to that. So we need to think that through. So plenty to go at. I don't know, Ross, whether there's anything else you think we should cover at this stage amongst the board. Good. Okay. Well, I think that's been a very good opening discussion. I think in the way that we had the first discussion on differential reporting in Lisbon, I think, again, another good opening discussion. And certainly, I think, thank you, Tashreeq, for the papers that you pulled together and for synthesizing feedback from the forum, which was very rich, as I think we've seen. So perhaps, Ross, back to you at that stage.
Yes, and before we move on to the discussion about departing members in a few minutes, I wanted to share a coming staff departure. This unfortunately be Tashreeq's last meeting with the staff. Tashreeq joined us in early 2022, and you'll remember he's principally been working on the measurement project, recently been helping us on the research on presentation of financial statements. Really grateful for Tashreeq's support. He's been working primarily remote from South Africa. You might remember meeting him at the September meeting if you were there in person, but really just want to thank Tashreeq for all his contributions, and I wanted to give Tashreeq an opportunity to say some words to the board now. Over to you, Tashreeq.
Thanks, Ross. Yeah, just a big thank you from my side to staff, board members and advisors for all your guidance and assistance on the projects that I've been working on. Yeah, that's it from my side. Just a big thank you.
So thanks very much, Tashreeq, on behalf of the board, and all the best for the future. So I think with that, we come to the end of the actual formal public session for today. As we know, the board will be getting the updated versions of conceptual framework, property, plants and equipment, and also the leases ED for consideration tomorrow. And perhaps, Ross, just a reminder on process on that before we close the session today.
Yeah, just to let members and TAs be aware, we're just finished them just in time drafting. Leah is about to send an email out to everybody with all of the documents that we'll review tomorrow. So updated ED leases, property, plant and equipment, measurement conceptual framework chapter, and a little bit of the measurement project on deemed cost and a couple PCs that'll be circulated any minute now. So you'll have that to have a look at. And again, tomorrow, as we've been through the major sessions, we'll go through the review of all of those items in the morning, and then we'll have a review of the work program before we finalize the meeting.
Yeah, so that concludes the public session for today. So I think, Leah, we're going to stop the recording at that point. There you go. So what we're going to do is move into the presentations to the